Hey guys, good morning and welcome back to T2SMC Trader. How are you all? I hope everyone is cool. If you can hear me, if everything is good, please let me know that. I'm just not sure that it will be a full stream or there will be a load shedding, but hope I'll be able to finish the stream today without any kind of interruption. But before going furthermore, please let me know if you guys can hear me. Ali Jali, hello brother, how are you? So Zivan, good morning brother. Sound is clear. Thank you so much. I don't want to spend the time here, but little greetings is important. Good morning, Chatur. Is there anyone else? Clear sound. Thank you so much, brother, for confirming. Sometimes I keep saying, I keep talking and you guys can't hear anything because of some technical error or maybe I mute myself. So I need to make sure that you guys can hear me perfectly before starting to talk anything over here. I hope you guys can hear me and would love to continue from yesterday, where I finished yesterday. So this is that daily chart over here. I was really interested to see this liquidity to be taken before before taking this liquidity over here. Market will go higher and it will take a minor buy side liquidity, then it will fall and take this sell side liquidity. But actually market has taken the sell side liquidity at first. But let's look at the daily chart, what happened over here. uh, I was talking about this yesterday. As long as this low is not going to be shifted, I'm not bearish. I'm extremely bullish for this resistance zone and for the all time high. I also told that I'm watching this fair value gap. Also, more importantly, this lowest down close body close candle, which is the order block. Yesterday's candle, it closed inside this gap actually. The before yesterday actually, before yesterday candle here, this one, it has closed inside this daily bullish fair value gap. However, I have added the volume imbalance over here as well. So just to make sure that I'm not missing anything. So it has closed inside this gap, as well as it has traded this lowest down close body close candle, which is the order block in my opinion. So I told you that as long as this order block is not broken, that means this low is not going to be shifted, I am long term bullish. So market has traded this bullish order block over here. Who is over here? Okay, good morning Tamimi. Guys, please hold on, I need to finish this because anytime load shedding can happen. So I need to make sure that I'm done before going furthermore. Okay, so I need to make sure this is done. Everyone is going to understand the fact over here. This word block has been traded. Now here is a threat actually. This gap, this gap is a threat. Why I'm saying this gap is a threat, because if this is a bearish market, by any chance I'm wrong over here. Okay, so this is actually bearish market. So in this type of scenario, if you see this market structure shift over here, this is the fair value gap that has been traded over here, here. All of them has been traded this gap. Now you can say that, brother, it closed above this gap. Doesn't matter. As long as this origin high is not taken, this is still a valid bearish 22 YT model from the daily chart. So this high is the origin high. When this high is going to be taken, then I can make sure that the bearish setup failed and the bullish setup is in mark, and market is actually going higher. So when this high is going to be taken, so as long as this high is not taken, it can be a bearish as well. I can be wrong over here. Market can simply go higher. So this gap is important to me, because when this market has closed or trade this gap over here, and then this candle has closed below this candle. Now you can say that this candle low is actually inside this gap over here. I don't need the precision over here, because I'm not going to take the entry from the daily chart. All I need to see the bullish candle that has traded this gap wherever the open of this candle is. I don't care about that. But if it was a 1 minute chart, I would, of course, I would use this candle as my order block, bearish order block, if the low was below this gap over here, below this gap. Okay, so as you can see, this gap, this candle low is not below this gap from my 1 minute chart. It's not a valid order block because I need the precision over here. But as this is the daily time frame or highly higher time frame, I don't need that precision. All I need the concept over here. So when you are going to do the top down analysis, you don't need the precision. You need overall idea what can happen. So this highest up close body close candle, which has traded this bullish gap, bearish gap over here after the market structure shift, this is one of the best order block. This is the candle that has traded this order block. I mean, that has validated this order block by that specific candle. Right now, this market is also trading the bearish order block, bullish order block, bearish order block. Depending on my analysis, that I'm interested to see this market to go higher, so I'm not going to give the priority to this gap over here because I'm bullish. So I want to see the body close above this gap because this is the last PD area below this buy side liquidity, the last bearish PD area. So that is actually referring the order block. This order block is referring by that specific bearish gap. If this gap is broken, I will believe that this bearish order block is also going to be broken, and finally this market is going to clear the buy side liquidity. So all I need to see the candle to close above this gap. For example, today's candle didn't close above this gap. If it happens, then tomorrow's is also an uncertain day for me to trade. If today's candle close above this gap, tomorrow's candle is gonna be a very high probable day for me. Even though this is Friday, tomorrow is Friday, still that is going to be a high probable day for me to look for the buy side liquidity, look for the buying opportunity. But if it doesn't close above this gap, tomorrow is also going to be a low probability. I don't know what is going to happen. It maybe will keep consolidating. It maybe will keep respecting the bearish PDRA, bullish PDRA. This market is actually jumping in between the bearish PDRA and the bullish PDRA. So it need to make sure that it is going to break one side. So if, for example, this candle just took this low over here, and then I'm seeing the market is going higher. Okay, so something like this, market actually fall and it came here. Then I am seeing this is going higher. I'm not bullish. I'm extremely bearish. So I'm going to find out that this is just a retracement to trade any sort of bearish period, and then it will keep falling. But as this low is not taken over here, so still I'm not thinking this is going to fall. Instead of that, I'm interested to see this market to close above this gap, and then after closing above this gap, market will respect or just tap to this gap and it will keep going higher to take the buy side liquidity until the 2.5 standard deviation, and then this market will fall again to take this obvious, I mean sorry, this relatively equal loss later. Okay, not now. It's a long term thinking process, but not now. Okay, so I'm interested to see this candle to close above this gap. That's why I'm interested to see the bull run only. But again, if I'm wrong and this market is really interested to fall to take this low, then it is that is the gap that is going to determine, is this market going to take this buy side liquidity, or is it going to fall for a long period of time for the last fair value gap, or maybe this gap, or maybe it would love to come for the dealing range 50% area, the big dealing range 50% area. That is going to be defined by this specific gap. One candle will close out this gap. I'll be pretty much confident that this is a bullish market for this buy side liquidity, for this all time high, for the minus 2.5 standard deviation. It is not closed above this gap over here from the daily chart. It means that it can keep bouncing for a long period of time, or maybe it will fall and take these lows over here. I'll be wrong for a long period of time. So that is all from the daily chart so far. You guys know that you have to give the highest priority to this specific gap. As long as that is holding the market, it is low probability to trade this market. If it is broken, I believe that this market will simply keep going higher and take this buy side liquidity. You are going to watch another this type of move over here. See this type of move. You are going to see this type of candles from the daily chart again until minus 2.5 standard deviation. It will just simply keep reaching for the minus 2.5 standard deviation, and maybe much more higher. We'll see that later. Would love to come for the hourly chart over here. So yesterday I told you that this market is not going to fall. Even if it falls, this is the last barricade over here. Now, what I wanted to see yesterday, I wanted to see this market to work like this way. It will go higher and it will, sorry, just a second. Weak magnet. Okay. So I wanted to see that this market will leave this sell side liquidity so that the buyers will start to think this is going to work as a support, and then it will come here to this hourly gap. By the way, I'm going to remove this daily bearish gap. So this hourly gap, market will at first come to this hourly gap, then it will come to this hourly gap, then finally market will go higher like this way. I wanted to see it like this way, but what happened actually? Market was not interested to come over here for this hourly gap. Instead of that, it fall and clear this sell side liquidity, obvious liquidity. Where did it came? Exactly where I told you that it is coming. This is the last area that it will come over here. After coming here, you have to be like, this is just a bullish market. So I'm bullish. I'm interested to see this market to go higher and come to this gap. And I'm seeing that this market is falling, falling, falling. Okay. So maybe I'm wrong. I tried one buy. I'm wrong. and then this market is falling. I'm not going to touch it. I'm not going to touch it. And finally, market came here. This is the area where you will start to look for the buy. There is only buying opportunity. How long? Until this hourly bearish gap, or maybe it will reach to the last gap over here. That is a, like depending on the price action. If it would love to really come to this last gap, that is also valid. There is nothing wrong. But at least until this hourly gap, it will simply jump from here to here. And when it will come over here, again, some kind of retracement, go for this obvious buy side liquidity over here. Why? Because now this market has no need to make any kind of trap over here. No, there is not even a single buyers left over here. Not even a single buyers left over here. Simply no buyers, only the sellers. So these people who actually took the sell around that area, they are only profitable over here. So every single time they will see some type of resistance, they will add more, and then market will take the minor buy side liquidity, fall to take minor sell side liquidity, maybe just a swing low, and then it will keep going higher. Or maybe market will never fall to take any sort of swing low. It will just keep grinding up toward that buy side liquidity. So whatever it is going to do right now, this is just a bullish market from my lower time frame or from my hourly chart. Again, if I'm wrong, then remember that daily bearish gap. So how can I make sure that it is really would love to go for this buy side liquidity? Today's candle will close above this bearish gap from the daily chart. This buy side liquidity is obvious. So what I'll think, I'll keep looking for the buying opportunity. If I'm wrong, then maybe I'll be wrong here. I'll take some losses today, and then I'll decide, okay, so that daily gap is holding. Let's hold up. Okay, what the market is really would love to do. I'm wrong, and market is really not interested to go for this buy side liquidity. It will fall and take this sell side liquidity. How do I know that? This gap will be broken, because this gap is the most important gap to this specific market over here. Market structure shift, entry fair value gap, breakaway gap, come back. First entry gap has been traded, went higher. Buy side liquidity has been created, come back again, breakaway gap. Lowest down close, body close candle, candles are the order block. I highly appreciate if it can tap to this area, see these candles, any of this area. Okay, I don't know how long it will fall, until the mean threshold, or maybe until to the lowest candle, I don't know. Or maybe it will simply tap to the high of these candles, and then it will start to go higher for this buy side liquidity. That is my highest probable area for trade. So how I'm going to plan? At the beginning market today, market will fall, and it will come here to any of these candles, and then it will go for this buy side liquidity. This is how I'm going to think this market is going to work. Okay. So over here, in the meantime, it will build some sort of buy side liquidity around that area, and simply market will come, fall, take this low, trade this 50-minute bullish gap, and then it will start to go higher. This is called the reaction from this hourly entry or the last fair value gap. I don't know it reached actually the last gap or not. Actually, it just failed to tap to the last gap, just for a tick or something like that. It failed to come over here. However, whatever it is, why I'm using the hourly chart? Because look at this 15-minute candles. See this 15-minute? It's totally messed over here, simply messed over here. So I can't use anything over here from the 15-minute chart. Instead of that, I should keep looking for the selling opportunity. I mean, sorry, the hourly chart, just to find out what is going to happen. All of this buy side liquidity here from 1-minute chart, from 15-minute chart, first market fall, take this obvious liquidity, engineered liquidity, fall one more time, engineer more liquidity. I really wanted to see it to take these highs over here. This high will be taken, and then even if it failed to take this, it's absolutely good, because I'll be profitable over here by taking the buy, and then market will fall. Take it. I'll look for the buy, and look at the reaction when it reached to this specific gap over here, to this hourly gap. See, look at just the reaction, how beautifully it reached to this specific gap from here to here. So I was wrong over here, because I wanted to see it to come here at first. Instead of that, it came here at first. So if it come here at first, I'm extremely bearish. If it come here at first, I'm extremely bullish. This is how you will look for the price action. I think this is the easiest way to look for. Yeah, you can wrong at the beginning. Like I was thinking it will take the buy side, then take the sell side and come to this gap. After from this gap to this gap. But I was wrong over here. So yesterday, maybe I'm wrong. Then I saw it came here. I don't give a shit about anything else. I'll look for the buy. Market has opened already. So let me see what is happening in this market. I'd love to go for the 1-minute chart, and I want to see where is the regular trading or opening gap. So this is the opening gap. Remember what I'm expecting. First, this market will fall, trade the order block from the hourly chart, and from the 50-minute chart, the gap, it will trade that, then it will start to go higher toward that buy side liquidity. That is how I'm interested to see this market to work today. So going to go back to the electronic trading hour. One more thing is, guys, this market is really difficult to trade because it's so scary to me to trade, because the volatility is kind of mind blowing volatility. Okay, so look at this candle over here. Exactly at, I think there was a news. Okay, I think there was a news, but even if there was a news, look at the news candle, like 138 handle. 1 minute candle from 9:30 is kind of 100 handle. So this is really scary to me actually. So remember, this low is my target right now over here. This low, that low, they're relatively equal lows. All of this trend line liquidity, they're going to be my target at first. I want to see this market to fall and take this sell side liquidity at first. Trade the 50-minute bullish cap as well as that hourly consecutive order block. After taking them, market will start to go higher again. That is how I'm interested to see this market to work. Okay, I'm not going to enter over here because this is really too volatile market. Like 1 minute candle, 100 handle, I'm not able to trade this type of market, to be honest. So we'll wait a bit more to see if it fall, and then can it start to go higher. The best case of scenario, it will, I'm not best case of scenario, it is going to close the opening gap, and then it will start to go higher. So here already I have found the trade. Market has cleared the liquidity, market structure shift, entry fair value gap, breakout gap. Please don't simply push the button because this is highly volatile. So if I'm wrong, it's gonna be a huge loss. Just observe it. Okay, just observe it. So I'm going to show you that if it was a normal market, for example, even if I could take this sell from here, and I saw that the stop loss is 40 handle, okay, something like that, 40 handle, at least until here, I would go for this trade, okay, until the low of this opening gap, I would go for this trade. In the meantime, I would try to take some partial over here, but if I'm wrong and this market really interested to go higher, okay, by any chance I'm wrong, 63 handle loss, huge loss for me. If it make any sense to you guys, please don't forget to push the like button and subscribe to our channel if you are new over here. Hey Jamil, bom dia, muito bem, obrigado, senhor. Tudo bem? Height, daily fair value cap. I have already talked about that. 2 weeks no giveaway. I'll give you one account actually next Tuesday maybe. Man, I'm in short of money. Okay, so I have actually requested for giveaway from the Lucid Trading. I hope they will give me some accounts. I'll give them one account. I'm going to give only the members. So whoever is my member, I'll just give one account to them. That's for sure. But if I have some more account, I'll try to give the normal giveaway as well, brother. However, if any of you are interested to donate some for our solar system, uh, you can simply come to this pin comment over here. Click on that link. You can donate over here. It's for our solar system. I'm in Bangladesh actually. So in Bangladesh, I'm facing a lot of load shedding problem. It's expensive actually. The solar system is highly expensive. So if any of you interested to donate some, you can donate through that link. It's not something like you have to, but like you want. I highly appreciate it, brother. Uh, I will try a sell actually. If I see a order block, bearish order block, I'll try to take a sell depending on the stop loss actually. So for example, it will come here or maybe here, and then it will build a bearish order block. In that type of scenario, I'll try to take a sell from the order block because I believe that from the order block, my stop loss will be much more smaller, kind of 30, 35 handle. I'll try to make it 30 through 35 handle. So even if I'm wrong, and market is not interested to fall for the area I'm expecting it will fall, the loss will be, like manageable, something like that. Hey Sharoda, how are you, sir? Is there anyone who is my member here? I can see Jamil's name and Sharoda. Anyone else? So what is the setup? First market went higher. take some sort of buy side liquidity over here, then gave me the market structure shift around that area, which is one of the beautiful market structure shift around that area. This is the entry gap. This is the breakaway gap. Now I can't put my stop loss over here, which is a 100 handle. So at least my stop loss will be here, 62 handle. From this gap, I would start to count the candle. For example, I was going to take this trade: one, two, three, four, five. I need the immediate reaction at least to this gap. And then I would love to see the fall. Okay. Hi, Uchuk. Good morning, brother. And thanks for the penguin. Guys, please don't forget to push the like button, subscribe to our channel if any of you are new. If you're interested, I think I'm explaining the ICT concepts in a better way. Yeah, I know that I'm not a famous YouTuber like other people, but still, I'm trying my level best so that you guys can understand the price action a bit better. It doesn't mean that I'm 100% right. Always I'm right. It's not something like that. But the way I'm explaining, does it make any sense to you? If it make any sense, then keep watching. How many times it's working? If you see it's working so beautifully, at least 70 to 80% of the time, that means that your win rate will be 70 to 80%. Right. So in that type of scenario, you can you can take it. Okay. First observe, first judge by yourself, and then decide, do you really want to stay with me or not? But if you want to stay over here, make sure that you are only interested to learn, not to copy my trade. Apex has 90% discount. If any of you are interested, please make sure you have used the code T2T. That is the only code for Apex, no T2 Wizard. T2 Wizard is actually for Lucid, Tradify, Trade Day, Earn to Trade, Bullnox, other platforms. But for Apex, we are using the code T2T, and it has currently 90% discount. I think that's a good deal. Hey RP, how are you, sir? Boom penguin boom. You good? Missed for a couple ticks. Lovely fall. Yep. This is so frustrating when, for example, I was really interested to take this sell. Okay. By any chance, it's not 60 handle, or maybe I'm interested to take that 60 handle risk. Okay. But by any chance, okay, I will never go for that. Never ever. But still think like that way. I'm interested to go for this trade. And I have already put a limit order to this gap over here because there is no volume imbalance. And I saw that this market just missed my entry just by few ticks, right over here, just by few ticks. And then I'm seeing this market is falling exactly where I'm expecting it should fall. It is just going over there. This is a disaster. Like in that type of scenario, controlling myself is highly risky. Actually, I'm not highly risky. I'll say like controlling myself is nearly impossible because that is something very good, right? So I am waiting for that good setup for a long period of time, and then suddenly the setup created over there, everything is perfect, but I missed the trade just by few ticks. Disaster. So it came here and built another sell side liquidity. I'm still not afraid that this market is going higher, even though it has traded the 50% of the opening gap. This is the 50% of the opening gap. I'm not thinking that this is going to fall. We'll observe this gap over here. Can he trade it and then keep falling? Not going to touch it. I told you that I will only go for I'll try to go for the water block setup. But as you can see here is no water block. I'm not interested to chase this market or nothing. I will wait for this market to come. First of all, that 15-minute bullish gap. Secondly, that hourly consecutive order block. So when it will go over there to hourly consecutive order block, then I'll start to look for buy again. For what? And look at this beauty. Just look at this beauty over here. Okay. This swing high has came here very near to that swing high over here. build another resistance zone from my 1 minute chart. Remember, this buy side liquidity is not valid if you don't have that buy side liquidity. So that buy side liquidity is actually the liquidity that will ask the market to go over there. So this buy side liquidity here is going to support that buy side liquidity. I'm not interested to hold the trade for this buy side liquidity. I'm interested to hold the trade for that buy side liquidity over here. Okay. So this is actually reacting from there and going to take this low. I want to see this gap to be traded at first. Then I'll look for the buying opportunity from here to here. Any level of these gaps, I'll mark them with the quadrant level as well, and we'll observe the quadrant level. And I'm gonna make it 2 so that I won't confused what is the opening gap and what is the quadrant level. So I'll make it much more bolder, and then I'll observe this gap over here. how mu- where it can actually trade upper quadrant high. I'm not going to expect, because if high is traded and then market started to go higher, I'm 90% confident that I'll miss this trade. So I prefer either the upper quadrant or the 50%, or maybe just upper quadrant and 50%. In between this is the daily old bullish gap low, so it can trade any of this zone, and then it will start to go higher again. So if I see an opportunity over here to take the buy, I'll look for that buy. If it make any sense to you guys. So that is that low. Remember, I told you that that low need to be taken. It is not enough. Uh, Already it has tapped to the hourly bullish order block, consecutive order block. I prefer. I mean, I know that already it has traded that bullish order block from the hourly chart, but I prefer more precision so that it can come any of this zone at first, like here to here. Okay, any of this area, and then it will start to gaining up. So all the people who are actually watching this market, they're going to think that, oh wow, this is a bearish market. That was a retracement. So let's jump into sell again. And I believe that this market will start to go higher again. The worst case of scenario, it will simply tap to the high of this 50-minute bullish gap, and then it will start to go higher. If it happens, I'm going to miss the trade for sure. So from here, it will start to go higher. I'll miss the trade. I'm going to remove all of them because I believe that you have got the point what I was explaining around that area from the beginning. So I'm going to remove all of them so that my chart can be a bit cleaner, because there is a lot of things and you can get confused. So I'm also going to remove this hourly gap from my 1 minute chart, because it's marked on my 15-minute chart as well as the hourly chart. So I don't need them here. I don't need this daily gap as well. I don't need this. I need this one actually. So I'll keep that. I'm going to remove this sell side liquidity as well over here. And we'll patiently wait to see if it can provide any kind of opportunity to take the buy from this zone. It doesn't need to reverse from here, but I'm now allowed to go for any kind of buy from here. Any kind of buy is now allowed for me. It can come here, it can come here, even it can close this gap 100%. I don't give a shit. All it will fall, I'll let the fall go. And then I will keep waiting for the buying opportunity. What type of setup is valid over here? First of all, order block is not valid, because the order block high has to be above this gap, which is nearly impossible for me to take the buy from here. For example, this is the order block, right? The high is outside of this gap, so lowest down close body close candle is order block. And this market, this candle, just for the sake of this conversion, closed above this candle. I'm good to go for the buy from this order block. It's the valid uh, order block entry over here. But the problem is, if I do that, my stop loss is going to be 100 handle. I'll let this go. Simply, I'll let it go. Not going to. I'll make it a bit uh, thinner, and going to change the color to yellow. That's cool. Let's hope for the best. In the meantime, I can also look for the dealing range over here. When the market fall and came to this gap, look, it didn't leave any kind of liquidity. Okay. But when it come here, it left not only the buy side liquidity, obvious buy side liquidity, but also a lot of things is left over here. So what what the market can maximum fall. The low to the high, I prefer this market to fall maximum until the lower quadrant. The highest possible area is going to go for 6 on 8, the 50% or the 6 on 8 level. So I'm gonna l- leave a line over here so that later I know that this is the 6 on 8 level that is actually respecting. So that is the 6 on 8 level over here. I'm gonna leave that line over there just to see can it reverse from that line over here as well. Now again, it will keep falling. I'll do nothing. Okay. And I'm going to remove this gap because it's already marked by the quadrant level. Going to remove this opening regular trading or opening gap as well, so that I can not going to get very confused. Yeah, perfect. So let's see. Just remember, it can come lower quadrant, low. All I don't want to see, the low from yesterday is going to be taken. Market open, market is falling. Don't touch it. Don't touch the falling knife. Don't touch the falling knife. Never ever try to touch the falling knife. I'm wrong. This is a bearish market. Don't touch the falling knife. You had the opportunity to take the entry over here. If you miss it, you missed it. You are not allowed to take any sort of sell as long as it's not going to take some sort of buy side liquidity. For example, you are bearish. Okay, I'm bearish. You and me both are bearish. Okay, but I missed the trade over here. I wanna take a sell. How I am going to be able to take that sell? First, this market has to build some sort of buy side liquidity there, and then it has to clear that buy side liquidity, then it has to fall again. I'm allowed to take the sell over here after clearing the buy side liquidity. If I ever chase the market over here, that means market is falling, I'm going to just enter over here. 90% of the time you will see that you just get stopped out. Either it will retrace and you will think that, oh, I took the sell, it was an extremely bearish market, but I took the sell, suddenly it started to go higher. Okay, so you will think that, okay, the fall is done, now I'm going to take the buy. And when you will take the buy, this is actually the retracement, taking the buy side liquidity. You got stopped out over, I mean, you took the buy here, and then you will see it is falling again. This is going to happen, and when it will fall, every single time you'll keep looking for the buying opportunity. This is a trap, so don't fall into that trap. So it came to the lowest down close body close candle from the wardrobe, from the hourly candle, water block candle. Let's see if it can start to go higher from here as well. Okay. Dealing range 6 on 8 level is over here. 50-minute bullish gap, lower quadrant is over here. You can see the body has closed below this line. I don't give a shit because as long as the 50-minute candle is not going to close below this, it is also valid to me. Okay, don't get confused by the gap and the 6 on 8 dealing range. Okay, so you are seeing this zone is a very important zone for me for the reversal. Now market doesn't want to reverse from there. No worries. Still, I have the last fair value gap below this entry fair value gap from the 15-minute chart. If it really would love to go for that last fair value gap from the 15-minute chart, I'll start to look for the buying opportunity from that last fair value gap. Okay. So finally, it has closed the 100% of this 15-minute bullish gap. So I'm going to remove this bullish gap as well, and I'm gonna keep just the last fair value gap from the 15-minute chart. Buy in case it would love to trade this area. Okay, so that is that last gap. But remember, anytime it will give me a buying opportunity, that's a valid buy to me. It doesn't need to come over here. If it come, good, but it is a valid buying opportunity if there is any setup for me. So it will make a setup over here. I'll take the buy. I'm not going to wait for this 15-minute gap. If it make any sense to you. Guys, please don't forget to push the like button, subscribe to our channel if any of you are new over here. I was waiting to push before I joined. I seen her call, thought let it go. So beautiful, we get the chance to view the market like this. Already a great gift. Love you, bro. All good. How is Amma? Everyone is good. Thanks for asking, brother. She's also good. How is your family members? Are they good? Asia law is about to be taken. I think it has taken the Asia law. Am I right or not? I don't know. So even I don't look at them. So did it take the Asia law? Let me know that, brother. 4 p.m. 50-minute candle from yesterday is one-sided move. NQ is going to rebalance that move. It can happen as well. Break 15-minute breaker from yesterday to 15. I'm not seeing that as a breaker block, to be honest. Now, it can be, but I'm not seeing this as a breaker block. I wanna show you something from the 15-minute chart. Remember this line that is that 618 to this dealing range from here to here, right? This whole dealing range, this is dot 618 level. Look how it is reacting from the so far, okay? So far, how it is reacting from this level. Of course, one candle can close below this line. The very next candle can close again above this line. That is also valid. All I need a model over here so that I can take the buy. If there is no model, I'm gonna let this go. What is my target? This beautiful buy sell liquidity around that area. Without model, I'm not going to simply push the button to take the buy. Hey, Titu, don't you think if the daily bearish fair value gap send it more lower? I have already talked about that. Uh, I think I've already talked about that. It can do that. This gap can do that because this is the most important gap. So if today's candle fail to close above this gap, tomorrow is also going to be a low probable day. If today's candle can close above this gap over here, above this gap, that's going to be a high probable buying opportunity for next few days. Not only tomorrow, next few days, it will be a high probable buying opportunity. This is the most important gap right now. That is going to decide, is this market going to take that low? Because if this low is taken, this is going to be a long-term fall, maybe until this area, a long-term fall. Okay, I think like that way. If it hold the market and send the market just below that low, again, if it failed to hold the market, this market is coming for 2.5 minus 2.5 standard deviation for sure. All I'm watching right now, is it really interested to come to this gap and would love to reject from this gap because that is the last PDRA. If it is broken, then of course this is the bearish market and I've already missed the opportunity to take the sell from here, right? So again, this is not gonna be a good trading day for me. I'll simply let this go. I wanted to see this market to fall at first, then go higher again for this buy side liquidity. If it doesn't do that, I'm not going to take any sort of trade over here. So came to the 50-minute last fair value gap. As it came to this 50-minute last fair value gap over here, I'm going to remove this 6 on 8 level because I don't need this level anymore. I need that level just because if I am thinking that maybe market will give me any sort of buying opportunity before reaching to this 50-minute last gap. Just because of that, I need the 6 on 8 level. But if I see this market fall for the 50-minute last gap, I don't need any other level over here because it already reached to the last limit. This is the last limit. So either it will reverse now or it will never reverse, something like that. Either it will reverse to go for this buy side liquidity or it will be a long term consolidation or the bear market. Bear market, I'm not able to take any sort of sell, at least not from here. It has to take some liquidity at first. Then maybe there will be a opportunity. I don't know. But for the for the bullish setup, this is the last gap. If this gap is broken, no more trade is valid. At least not the buy setup. Fake breakout is acceptable, by the way. Good morning, Edith. 15-minute bullish breaker block is repriced now. Maybe we'll start to going higher soon. That's cool, man. We'll see that. Don't you 15-minute crash here? Yeah, if you don't know what you are looking for, then it's right. Like, what the hell is this guy talking about? This is an extremely bear market, like extremely bear market, right? If I saw you show you this hourly candle, look at this hourly candle. Like it is bigger than that candle. So I think it's kind of couple of hundred handle. Okay, so not couple of hundred handle. Just just kind of 800 900 handle. Okay, something like that. So it's a 900 handle just by 24 minute. Just by 24 minutes, right? So something like, what the hell you are talking about? This is a bearish market. Take the sell. I'm not interested to take the sell. Already, it should start to reverse from there. If it doesn't, I'll just simply wait for the next opportunity. Sorry, the selling opportunity after taking the buy sell liquidity. So until here, I'll keep looking for the buying opportunity. Remember, this gap can be broken one time from 15-minute chart, but the very next candle has to close above this gap. No, 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 no. Did you anyone catch? I don't know. Is there anyone who catch that cell? For this fall from 9:30 candle spike, 550 handle booked. Congratulations, Edith. Though my target is 100. Congratulations, by the way, brother. By anyhow, congratulations. You got 550 handle. That is awesome. Almost 800 handle after 9:30 open. Absolutely. Yes, took the low. Then I have the SMT. Yeah, I can see that yes has taken the low as well. Like this low has taken over here. So I have the SMT as well. Let's see. Can it reverse now? If it keep falling, not going to touch it. Good morning, Tito. Also got my boom, was busy trading. Hey, Spoon, congratulations, brother. Okay, so some of you actually got that fall. That's cool, man. Really awesome. Now, look, it's really so hard to believe that this market will start to go higher again, right? It's so hard to believe. By anyhow, it will keep falling. I'm wrong. I'm not going to touch it. But I would love to be strict with my plan. What is happening from my daily chart? Okay, so let's start from the daily chart one more time. It seems like this is an extremely bearish market, right? So this low has taken over here, build a buy CB, sell side imbalance, buy side inefficiency, trade that by sell side imbalance, buy side inefficiency, going to fall, and everyone is thinking about this sell side liquidity or support zone. So this is going to fall. I'm not interested to see this to take this low. However, there is one more thing. If previous day low is taken and today is Thursday, so it has a high probability to keep falling. Okay, because on Wednesday and Thursday, if previous day low is taken, there is a high probability that market will keep falling. It's not going to go higher anymore. So for me, this low is highly important to see if I'm bullish. Okay, if I'm bullish, I don't want to see this low to be taken. Previous day low, it should not be taken. If it is taken, there's a high probability it will fall. However, what I'm seeing over here, this bullish gap is holding the market, and this market actually came over here by respecting from the bearish gap. So what should I think at now? Is this going to fall, keep falling, or is it going to reverse from the deep discounted area, right? Retest the order block one more time. Can it start to go higher now? Or the bearish gap is going to hold the market and send it lower? I could say that it is going to fall if I saw this candle has closed below this bullish gap. Maybe I could find out some opportunity to take the sell. But as this bullish gap is holding the market and market is trading this bullish order block as well, I'm not simply thinking that this market will keep falling. I'm wrong and market will keep falling. In that type of scenario, I'll simply let this go because I have missed the opportunity at the beginning, depending on my expectation. When I was expecting this market to go to the deep discounted and then it will go higher. But as I missed that opportunity, I'm not going to chase the market over here. What is happening from the hourly chart? So in hourly chart, this market doesn't have any sell side liquidity except this one. This is the gap that is holding the market so far. And this sent the market actually to this specific gap. I told you, right? Very specifically that gap and that gap. So it came here, rejected from there, came to this gap. Look at the reaction here. Nobody has closed below the 50% of this gap. See here from the hourly chart, not even a single body has closed below the 50% of this hourly gap. Somebody has closed above the 50% of this gap. This is a sign I'll be back. Now or then I'll be back over here because I closed above this constant encroachment of this gap. As the body didn't close below this, I'm still not thinking that this gap is going to be broken and market will keep falling for this relatively equal loss, which is the sell side liquidity, and going to switch the market for a long period of time bearishness. But we'll see. Don't chase the falling knife. This is a valid swing high for me to shift the market. So now it's time to see, can it do me a favor and give me a market structure shift, fair value gap, so that I can take the buy over here. So can it do that? It will keep falling, not going to touch it. As the market came back again to this hourly gap, I don't need this 50-minute gap as well. I'm going to remove it. But remember, one candle can close, that 50-minute candle can close below this, and the very next candle can close above this 50-minute gap. Still, this is a valid gap as long as this low is not taken. So I'm going to remove this one and going to watch how it is going to work. All I need to see this high to be shifted this high to be shifted so that I can start to think about a buying opportunity. Not simply going to take the buy, I need the confirmation because this is a highly volatile market. If it was not highly volatile, 2020 handle, 30 handle risk, I would go for that risk without any without thinking about that. Okay, because if I'm wrong, I'm going to lose maybe how much? Maybe $200, $300, something like that. In a 50K account, $200, $300 loss is nothing. But as this is a highly volatile market, which is really so scary, at least to me, like 100 handles so far. This 1 minute candle is 100 handles. So I took a trade and I took a loss over here for 100 handle, just went with the 2 micro contract. It's a $400 loss. So for a 50K account, $400 loss is a huge loss to me. So let's plan the trade at first, then trade the plan. Now I'm interested to see, can it shift this high? I need the market structure shift without taking this low. Remember, if this low is taken, which is the previous day low, this has an high probability to fall for this sell side liquidity. If this sell side liquidity is taken, there is a high probability this will go for the 50% of the dealing range of the grandparent dealing range. So now I need to see, can it shift this high? And depending on the stop loss, I'll try to take the buy. I don't like the relatively equal highs, by the way. However, I think I can take a risk over here. Let me check. Let me check. Yep, I can take a risk. I don't know it will give me that opportunity or not. So this is the candle that has closed above this candle. So far, it didn't provide that opportunity. Let me see the stop loss. 94 handle stop loss. Okay, I got the market structure shift by the way, but I don't know if there is any fair value gap or not. Uh, what can I do, man? Like 94 handle stop loss. I better let it go. This was a valid order block to take the buy, but this candle has closed above this candle, so the order block is not been traded yet. It doesn't need to trade it, by the way, but the order block has been didn't been traded yet. So you see how it is reacting from here and how it is going to grind up. How far? This is the most important gap. Watch it. Okay, we will go for the trade if we see something good. Then just watch it. Look at this gap. This is a highly valuable gap over here. Why is that gap important? While this market entered into the last PDRA, right? This is that last PDRA. Before entering into this last PDRA, this is the last gap. Look at this gap. This is the last bearish gap. So if this market is really interested to keep falling, to break this gap, this is the gap which will be traded and market will fall again. So you have to give highest priority to this specific gap. For example, you are already in a buy over here. You have to take the partial to this gap. Now you have to add the volume imbalance if there is any. I don't know if there is any. I think there is no volume imbalance. I can be wrong, by the way. You guys just watch it, okay? However, this is the gap you have to give the highest priority. For example, you are in a trade already, and okay, I'll observe this 22 YT model, by the way. Not going to take it yet because the volatility is huge. So I'll observe this gap. See, market structure shift, fair value gap. Can it respect that fair value gap and keep going higher, break this gap over here? Let's build it a very losing proof, okay? We keep taking the entry. So let's make the analysis much more deeper so that we can find an idea. Remember, it has zero possibility to fall without trading this gap. So from here to here can be a good scalping from this gap to until that gap. A very good scalping. I'm not going to go for that, but just remember from here to here, that's a good scalping. Here to here. As long as it's not going to touch this market, there is nearly 0% possibility for this market to fall. Stop loss just below the candle that has built this gap over here. Okay. Again, the volatility is huge. Not talking about the volatility. I'm just giving you the logic. From here to here, it's an high probable buying opportunity, a scalping opportunity. So now it came to the most important gap. Again, why it is the most important gap? Because while this market came into this gap, right? This is the last PDRA for the bullish market. Last PDRA. This is the gap market left over here. So even if this market really would love to fall, keep going through this without the retracement, acceptable. But if it would love to give me the retracement to take some sort of buy side liquidity, it has to reach until this gap. If the market really would love to go higher, it has to break this gap and then it will start to keep grinding toward the buy side liquidity. So we'll watch how it is going to work. Now, I'm not going to take this 22 YT model as well, right here. Market structure shift. Okay. So, not there. There, that is the valid 22 YT model, market structure shift. There is the fair value gap. Why I'm not taking it? Because look at the volatility. Just from here, at least I have to put my stop loss by covering the order block, close, down, close, body close candle. I can't do that. So I'm gonna let this go. The way I let this fall go, I'm gonna let this go. I will still wait for the order block to take the buying opportunity. Okay. But if any of you would love to do the scalping, just make sure your stop loss is one tick below this candle from this gap to until this gap. And then if you have the opportunity to take the partial to the 50%, take the partial. Any of this 50%, low or high, is an high probable area for the reversal. I'm not thinking about the reversal, but if the market really would love to fall, keep falling, any of this level can be respected. It is for the scalpers, those people who are interested to scalping. I showed you like some days ago when I was doing the scalping, small trade. I'm planning a good trade over here. Okay. So I need a bit more time. See this 22 IT model, most logical level here. Remember, this low line can't be taken over here. So I'm going to mark it as a white. This white line can't be taken. If this line is taken, there is a high probability market will go for the sell side liquidity. It is only valid either in Monday or Tuesday. Now, brother, you are saying that it will reverse from here, it will reverse from there, it will reverse from there. It didn't do that. I don't need that. Any of this level when this market reach and then this type of scenario appeared, I'm going to jump to the trade. I don't give a shit if it will have to fall. Now, if I get stopped out, I'll keep looking for the same opportunity. So here, when it is coming around that area, did it provide me any sort of buying opportunity? Not even a single opportunity except this one. So this is the only opportunity this market has given me to take the buy. But I'm not taking it because of the volatility. This is highly volatile market. In my opinion, this is simply a gambling. Even if I go for one micro contract, just by one micro contract and my stop loss, at least I have to cover the opening of this candle. So it's kind of 123 handle. And 123 handle is something like, okay, I could get the 1:1 by the way, but it's okay. Brother, don't take it. I'm not taking buy now. I want to see confirmation that we are bullish. Of course, man, I'm not taking this. I would go for this trade without any sort of confirmation if the volatility is not this much huge. But like 100, 200 handle stop loss, not interested. Just observe this gap, okay? If this gap is broken from 1 minute chart, there's a high probability this market will go and go for this buy side liquidity. Even if it failed to go for this buy side liquidity, mark the dealing range from here, from this high to this low, look for the 50% and 6 on 8 level. They will be traded if this gap is broken. So for now, maybe here, see this and this. For example, I'm wrong. Market is not going to go for this buy side liquidity. And this gap is broken. Okay, so one candle, not the fake breakout, guys. One candle has closed, the very next candle again closed inside this gap. Not that type of fake breakout. A clear breakout. Something a very clean breakout above this gap. Like not this type of gap. Okay, the next candle will close below. No. Like this candle closed here. It will come either, even if it failed to come over here, it will come here or here. Keep watching. Brother, you're not taking the trade. Again, I'm showing you the setup, but this is highly volatile market. I'm not able to enter over here. But look how it is working so beautifully over here. That one. Okay, by the way, it missed the entry for few ticks, but the logic, you know the logic, right? Logic. So market will fall. You will start to think this is a bearish market. I know when I should look for the bearish market. When this is taken, this line is taken, then I will start to think, oh, okay, now this is a bearish market. Why? Because textbook teach us previous day low is taken, now look for the previous day high, right? This is how the textbook is teaching us. But to me, if previous day low is taken by Wednesday or Thursday, it means that market will keep grinding for the next sell side liquidity level. So now look, observe it. Okay. So this gap is broken. It has a high probability to come over here. Before going over here, I highly appreciate this market to fall around that area one more time. Okay. So, sorry, not there. Like around this line or in between these two line. I want to see it to come any of this line at first, then go higher. Let's see if it can do that. Think like it's not highly volatile. I'm already near two trade, sell and then buy, sell and then buy. No, actually there was no trade. So market never trade this gap over here. Nice. What did I tell you? If this gap is broken, observe it. This is the most logical level. As long as it's not reaching over here, this is not a bearish market. For example, I'm bearish. Market is going to fall. Market is going to come for this sell side liquidity. There is nearly impossible for this market to fall without trading any of this line. So anytime it will fall, it means that it wants to give me another buying opportunity. How far it can fall? From here to here. Best is here, but it is also valid to come here and then start to go higher. Please don't forget to push the like button and subscribe to our channel if any of you are new. Lucid Trading has a 50% discount if any of you are interested about Lucid Trading, which is really awesome. You can use the code T2 Wizard. For Tradify, they have daily payout as well. You can use the code T2 Wizard. I want to show you one more time. I want to ask you that. Now these days, I'm really struggling with lot of struggle with the solar. I mean, with the electricity. So if any of you are interested to donate something, it's not something like you have to. So far, I have got $237, I guess. So if any of you are interested, you can simply click on the link on the pin comment and donate. Even like $1 is appreciated. Okay, it's not something like you have to donate $100, $50, something like that. Just $1 is also acceptable, because like I have 12,000 subscribers. So if everyone just donate me $1, I'll be able to get $12,000, and I just need 5,000 to $5,500 for setting up the solar system. So even if there is a load shedding, I'm not going to worried about. Every time I'm doing this live streaming, you know what I'm thinking? Anytime the electricity will be gone. Something like maybe the electricity will be gone. So it's really hard for me to deal with this electricity problem. So you can click come over here and simply donate here. So it's not a spam or something. Don't worry about that. You can donate through that area. Wow. So it's falling, right? You are going to take the sell. Go for it. And those people who are really interested to learn, look, this is just the retracement. How long? Either here, maximum here, or the 6 on 8 level. 6 on 8 until here. Okay. So it will do like this way. Come here, maybe. Okay. It doesn't need to come over here, but it come here and then it will come here or here. And then I have to decide again, does it really would love to keep going higher, or does it want to fall and go for this sell side liquidity over here? Something like that. What does it really would love to do? So keep observing. Any kind of buying opportunity now is a valid buy. I think I'll try this buy. Let me see how much is going to be the Stop loss if the candle close. Okay. Oh man. Mm, okay. I wish that this candle is not going to close out this candle, because in that, if it happens, it will be tough for me to hold on. Maybe I'll try to cover the mean threshold and then I'll go for this trade. So let's prefer that not going to close out this candle. I need a smaller stop loss actually. By any chance, by anyhow, I have to make a smaller stop loss. Brother, I'm going to take the sell. Please go for it. I highly appreciate it. If you would love to go for the sell, please go for it. If you find any opportunity, take the sell. Just observe this two line over here. Can it hold it and send it higher again? And finish the unfinished business. Obvious liquidity, right? Here, obvious liquidity. As well as this line and that line. That is the dealing range 50% 618 level. So from 9:30 to until here, the fall 50% is this area. So I'm interested to see this market to come over here. So now this is the order block from the dealing range. I just don't know I'll be able to take it or not. What can I do here? I don't see any logic behind taking trade around that area in this volatile market. Like 1 minute candle is highly volatile. So how can I enter? How can I enter? I'll sacrifice the trade depending on the mean threshold. So I'll frame the trade from the mean threshold. Is that good idea? So if it come to the mean threshold, I'll be able to enter. Or should I sacrifice the loss? That means if the word block is going to be validated over here, I'll take the entry from the word block and I'll put my stop loss just below the mean threshold. Which one is good? Still, both of them are 40 handle plus. Let's the market decide what he really love to do. Okay, let him decide. I maybe I'll chase the market. That's good. I think I'll chase the market. Because in this area at the bottom, I'm not able to enter because of the volatility. So if I see the word block is respecting, I'll immediately jump into a trade. While I'll get confirmation that this word block is not going to be retested one more time, I think I'll jump into a trade over there. I want to show you what is happening on YM. Look at this YM candle. See, this is the YM. This is the first candle where you have seen this big fall. This is that candle from the YM. And this is the second candle which is happening over here. That is the second candle. So for it has opened for 19 minutes. It has already came over here. Tough decision, tough decision, tough decision. How can I take it? How can I take it? Like this is highly volatile. If I were here, I'm already in a trade. While it tapped to the high of this gap, for example, it's not highly volatile. I'm already in a trade over here. just by covering the opening of this order block or the main threshold of this order block. So from there to until covering the main threshold. Do you know why? Because as I explained this gap to you, remember this gap, why it have violate this gap. Sometimes you see the violation of the gap, right? Why this gap is has been violated? Because this market had to fall until here or the here, any of this level, right? It has to fall. So that's why it has violated this gap. And now look at the candle, how it went through this gap over here. So beautifully, right? Then tap to this gap. I'm already in a trade. For what? For this obvious buy side liquidity and for this 50%. Now, again, this is highly volatile market. I'm not able to take this entry like 84 handle risk. I'll just let it go. But you're getting the point over here, right? How you're going to read the market, right? Like this is extremely bearish market, and you are going to think that, oh, okay, so it's now going to fall again because it has cleared this buy side liquidity, or maybe it has taken this. No, man, you have to understand these levels at first. This is called the dealing range. So if you don't deal with the dealing range, you are just dealing with nothing. You don't know what you are going to do. So you are seeing this fall, you're going to take the sell over here, and you are just fucked up over here. So try to listen to me. I'm not taking the trade because the volatility, but just listen the fact over here. If it was a normal market, I would have already taken that trade. So here, try to take the sell. Here, try to take the buy around that area, and then maybe I would get stopped out by trailing the stop loss. I would re-enter over here from this gap by targeting this line, and maximum I would hold the trade until that line, because it doesn't need to come over here. It can simply tap over here and then can start to fall, or maybe it will keep going higher and for this buy sell layer. I don't give a shit. I would make sure that my partial is already taken around that area. But unfortunately, you see, what is this? Oh, man. However, is there anyone who took any kind of trade today? I hate these V shapes, reversal, can't trade them. Okay. Marquise, boom. Do you guys talking about this V? I mean, sorry, Suzivan, are you talking about this V, brother? Here? Like here? Like this is the V? It's a short. Hey, Vitaly Chernik. Okay, that's awesome. In this type of scenario, I have actually studied this thing like at the beginning of my life. What I have seen that rather than V, I would call you W. So something like this. W. So this low is taken. Start to look for the buying opportunity from there. Okay. Good morning. Go 3817 dash 16 I6R. How are you, brother? That V. Yeah, of course, man. Where did it came? Did you see where did it came? However, if any of you are interested to take the short, please go for it. I highly appreciate if you really find a sell over here, and I believe that you'll be profitable. To be honest, so if you find a sell like Vitally, I think you took a sell. So be care. I mean, sorry, not be careful. Just boom for you, brother. I was trading in a different world. I agree with you, man. I mean, Dow. I don't know what is happening on Dow. Watching it, what it has done, build this liquidity much more stronger. Now what do I have over here? A strong resistance, the beautiful resistance over here, right? So whenever this low is taken, there's a high probability to take the buy over here. From this low is taken, that means the liquidity is taken, there will be a high probable buying opportunity from there if this low is taken. Otherwise, if this order block is holding the market and sending it higher, in this type of scenario, like I will not be able to re-enter over here. For example, I was in this trade and I missed my stop loss is below this low over here. I can add more over there, but I can't re-enter over here. Of course, I can add more over here because I took first entry from this gap. So when I saw the water block has been traded, I can add more over here because it has built the clean buy side now, right? Previously, I didn't have the buy side. It was obvious liquidity, by the way, But now I have the buy side liquidity, real buy side liquidity. So what I'm going to do, I will keep adding more here. When it will inverse this gap, I'll add more over there. When this gap will be inversed, like like this, like this, I'll add more over here. As long as this low is not taken, because my stop loss will be just below this low. Who is in a short right now? Let me see the faces. Who is in a short right now? And who is in a buy right now? Is there anyone who is in a buy right now? Is there anyone who is in a short right now? Let me know. Let's see how many of you are actually trading right now. Is there anyone who is in a short? Is there anyone who is in a buy? Buy short, buy short, buy short, long or short? I'm in a buy. Okay, Game Jones 24, you are in a buy. You have a you have a gut, man. So strong. You're really so strong. Congratulations for your buy, brother. I hope you'll get your boom. Make sure you have taken the partial when it is going to clear this buy side liquidity. So you have to take the partial over here because this is the most obvious buy side liquidity right now. And then you can close your trade over here, or you can just take another partial over here. And I hope that you'll get your boom, brother. Waiting to short for previous day low, bro. Best of luck, brother. I hope you'll find the trade and you'll get the boom. I believe that even if it would love to fall, it will fall from this red line over here. That is the 50% or the equilibrium. I hope it will fall from there. If it falls, okay? So just be careful before framing any short. I would add more over here. I would add more when it would close above this gap. Uh, Unfortunately, this is highly volatile, so I'm hanging. I was really interested to take the buy from the water block, but like this was a valid water block entry as well. Like when this candle has validated this water block, one, two, three, four. Within four candle, I got the entry opportunity from the water block as well. But unfortunately, I'm not able to take the buy over here because of the volatility. If I'm wrong, I'm going to lose a lot of money. So I'm not interested to lose the money. If it was a small money, I could go for that. Hope I'll find something good actually. Oh, one more thing actually. Look at this gap. Okay. When it violates this gap over here, I mean, this gap has been violated by this candle. Look at the candles closing inside this gap. See, not even a single body has closed below this gap. So, are you getting the point? When sometimes ICT showed you a gap, like this gap, like he has marked a gap over here, and then he extended to your right, and it's showing you that specific gap. How you're going to get those type of gaps? This is how ICT knows thousand times better than me, right? So this is how you are going to see the gaps to use later. Why this gap is now holding the market over here around that area? Because this is the most strongest gap and it has already confirmed I'm going to go higher. Why it has fallen, come back again to this gap? Because it is now working as a support. More importantly, it needed to trade that word block because word block not been traded over here. So it came back again to trade this word block, and I believe that this gap will hold the market, send it higher again toward that buy side liquidity 50%, 6 on 8 level. I hope so. Let's see. I'm not taking any trade as long as I'm not finding like the low volatile area. If I don't find it, I'm not going to take the trade. I'm just watching it and I'm framing the trade. By the way, if this trade is valid here, stop loss should be below this logo, which is nearly impossible for me. Because by any chance, it really would love to the week want to trade the 50%, I can get stopped out. It can happen, right? We can did the damage. Look at this week over here. It has done a lot of damage over there. So even though it has closed above the order block, but the week has done a lot of damage over here. So I have to be very careful that it can simply come very near to this order block low, around that low as well. Keep watching, keep watching. Who is in a trade except game zone 24? Is there anyone who is in a trade? Makes sense. I'm looking for the 15-minute gap to be hit at first. I think this high is the actually 50-minute bearish gap as well. So please be careful. It can simply reverse from this gap as well. That's why I told you you have to take the partial over here. So I prefer it to come here, but like this is the 50-minute gap. So just to be a bit careful over here. The 50-minute candle has closed already. And to be honest, it's an indecisive candle. Like over here, look at this candle. Fall until here, went until there, closed in the middle. So it's a indecisive candle so far. Let's see how it is going to work over here. Mickey, 1004 buy. 1004 buy. Where did you take the buy? 1004, 1004. Okay, so you took the buy from this fair value gap. Remember this candle. Okay, look at this candle. This is real order block. To this market, the change in state of delivery is this one. Okay, that order block is supported by this order block. Okay, so some of you can start to ask. Okay, nobody actually asked in, but some of you can tell that why I'm using this candle as an order block. First of all, dealing as an order block is good, but more importantly, this candle is supported by that specific candle. Okay, this is the real order block that is supported. This candle is supported by that specific candle. Okay, so this order block actually came from that order block. Now look at the price action. A bit difficult because it's just spending some time. I believe it was spending the time for 10:30, but it's already 10:32. I don't know why it is still hanging. It should start to move toward that buy side liquidity within 1, 2, 3, 4, 5 minutes. I am just not sure why it is still hanging over here. It should start to grinding up toward that liquidity. So all of this is time distortion for 10:30. When it is already 10:30, it should start to move toward that buy side liquidity. This is for your learning purpose, guys. So if you're really interested to learn it. Okay, this market will be stable again today or tomorrow. It will be stable again, and when you will know this information, you are going to you're not going to get surprised why this gap is holding the market. It is not something random. This is very logical. I'm just not sure how long I'll be stay over here because anytime there can be a load shedding. Outside it's raining, heavy raining actually. So I'm just afraid anytime there can be electricity out and I'm gone. Okay. So if it happens, just remember what I told you. Until this line, I'm bullish. After reaching to this line or that line, I have to decide what the market really wants to go. Okay. So did it make any sense to you guys? As I told you how long it can maximum fall here, any of this line. Why? Because it has to come back again into the equilibrium at least. It doesn't need to, but it is the best case of scenario. And then look at this specific gap. It violate, that means it has already confirmed I'm coming for this line. The confirmation is already done. And then this is the fall. Why it is falling? To come to this range, dealing range, low, high, 50%, 6 on 8 level, any of this level. Order block, confirmation, I'm broken. So now this candle has nearly 0% possibility to break this gap. It can happen, but it's nearly impossible for this market to break it. And then the market is going higher. Look for the gap. Look at this gap. It is going to be an unfilled gap. If it is going to be an unfilled gap, that means market leave this gap open. One tick is open of this gap, not only coming here but also coming here. I believe so. If it is not closed by 100%, if it is closed by 100%, it means that as long as this low is not taken, there is a high probability there will be a breaker block entry opportunity. If this gap is sorry, not this gap, actually it is closed immediately, so I can't use this gap anymore. I have to wait for the next gap actually, when the market will make the next bullish gap, and it will be an unfilled gap. Okay. So far this market has cleared the liquidity over here. Trade the 50-minute bearish gap. Does it really would love to fall? I'm not thinking this is going to fall. Okay. I'm not still bearish. I'm still thinking this will come over here, at least over there. Then I'll think it will fall or it will go higher. But now still it's not done. Okay. So the the upper run is not done. Of course, it can fall because it has traded the 15-minute bearish gap. But for example, I'm in this trade. I'm not going to close the trade over here. I'm still believing this will come over here. I'm not going to trade close that. What I told you over here, remember this gap around that area, this gap, just remember, if you don't forget it. I'm already in a trade from this gap around here, okay? So I will add more here if it is not highly volatile. I'll add here. When this candle has violated this gap, failed to take this buy side liquidity, I will add more over there. But when the buy side has been taken and came back again, trade this gap, just not interested to add here. Instead of that, would love to put my stop loss just below this candle. That candle has, violated this gap over here. Just below this candle, my stop loss will be over there. Not even the the break even, but just below this gap. And I will keep waiting for a gap, bullish gap that will be unfilled. If I see the bullish gap, and by the next 3 to 4 candle it's unfilled, that means that I'm going to get the boom for here. But remember, this is the most logical level to take the partial from any of this area you entered. This is the most logical level to take the partial. Then the most logical level to close the trade is over here. Even if you don't want to close the trade over here, good, but make sure you have just left one micro contract. All of them are closed when it will come over here, and your stop loss has to be to the break even if there is anyone in kind of buying already. Don't you are in a long. Wow, congratulations brother. Don't you manage the trade logically, and if it is a winning trade, just stop over there. It's propulsion block. I don't want to use that term because for being a propulsion block there is a lot of critical analysis actually, in my opinion. So if you watch ICT's video, you will understand that why I'm saying the propulsion block is critical, because the way ICT has explained, I tried to break it down by myself. So difficult. So if you see, like for example, this is the propulsion block. If it was working as a propulsion block, like immediate propulsion block, right? Here, this candle, and then tap to this candle after validating the word block, tap to this candle, lowest down close body close candle. Later, it come back again to this down close body close. I'm not interested to use that down close body close candle as my propulsion block. Something like a bit critical, actually, to be honest. I marked the 1016 candle as a propulsion block. 1016 candle, 1016 candle. 1016 candle as a propulsion. Yeah, please guys, go for it. I have no no argument. I have nothing to say, okay? Look where the market came. To this bearish. Still, I'm not thinking this is done. The job is done. I'm not thinking that. But so far, it came here. Of course, I can be wrong, and this market can simply reverse from this gap. What I'm expecting, it will come to this big gap over here. See this gap from 15-minute chart? I'm expecting this market will come to this big gap over here. So over here, around that area. Any of the level of this gap, actually, maybe the lower quadrant, which is around there, or maybe here. Um, like 6 on 8 level is also the lower quadrant of this 15-minute gap. So I prefer this market to reach over there, at least to this line, and then maybe it will fall. No worries. I don't care about that because I'll be already profitable over here. But in the meantime, I will make sure that I've taken the partial over here. So I'm going to remove it, and I'm going to make sure that I have taken some partial over here. Maximum portion is out of the trade already. And also some of you can think that, brother, it's not 1:1 because your stop loss is 120 handle. First of all, this low is not 1:1, but this high where the market came, okay, so far, it is 1:1. Look at this. For example, this is a normal market, okay? So 20. It's a normal market and this is not 120 handle. Instead of that, maybe this is 20 handle. So it has provided you 1:1. So even if you don't want to close the partial exactly to the buy side liquidity, you have the opportunity to take the partial around 1:1. So if in a normal market, you have already get an opportunity to take the partial around 1:1 and put your stop loss to the break even. And if you do it, you'll never get stopped out. However, this if there is a gap market is going to build, I'm 90%, 99% sure that gap will be unfilled. 99.99% sure that gap will be unfilled. If it build, okay, any sort of bullish gap right now, I'm 99.99% sure that gap will be unfilled. Market is not going to fill that gap 100%. So watch it. If it do that, if it doesn't make any bullish gap, nothing to worry about that. How long it will be unfilled? Until this red line. Watch it. Now, why is that? If it build the gap, if it doesn't, then of course there is nothing to say, right? Because there is no gap. But if it build this gap, like watch it. When it will leave it unfilled, I'll explain why I'm saying that I'm so much confident this is going to be unfilled. Uh, I was not confident here, but why I am saying that there's 99% possibility it will be unfilled. I can be wrong again, but I prefer this gap to be unfilled now. That means market is not going to fill this gap 100% right now. So target will be there. Watch it. I'll explain it within a moment. This is not going to be filled. Okay, the candle is not going to touch the low. Not even the body. I'm not talking about the body. I'm talking about the wick. Wick even can't touch the low of this gap over here. If you know this type of information, you'll be so much confident to trail your stop loss. Okay, it didn't leave that gap open. So of course, if I were here in this trade, maybe I would trail my stop loss below this candle and I'd get stopped out over here. But why I was thinking like that way? See this gap over here? This is not the inverse gap. It is called the sorry, reclaimed inversion fair value gap. Reclaimed inversion fair value gap means that when it has fall here, tap to this gap, and then market fall, closed above this gap, take this high over here. Now, when the next time this market will come over here to this gap, it is going to work as a reclaimed inverse way. So for the first time, when like here, if it come and tap to this gap over here, and then this is the first time, right? And then this candle, the lowest down close candle, has been validated by this specific over here, that candle. It has been validated as a bullish order block again. So when this candle has closed above this candle and then market has built a bullish gap, I prefer this gap to be unfilled and send the market higher until the most logical level, whatever I'm thinking. So that's why I was thinking this is going to be the unfilled gap over here. Still, market is not interested to fill, make the unfilled gap over here. So I think it will fall now by respecting that 50-minute gap. Maybe there's a high probability it will fall now by respecting this gap to take some liquidity at first, and then maybe it will go higher again. I'm going to remove it because the last line here, when it has built this, I prefer to trail the stop loss below this candle and I'll simply get stopped out because that should be unfilled. If it is filled, there's a high probability market will fall to take some liquidity, either this low or that low, or maybe it will come to no, there is no last fair value gap. So maybe it will take this low over here. So even if I were in this trade, I would already get stopped out below this candle after seeing this gap as an unfilled gap. No breaker block is valid to take the buy again. Uh, I think that was a really good market, except the volatility. I'm not thinking about buy now. I'm also thinking a sell over here actually. So can the market fall and take this low, at least this low? I don't know it will take that low or not, but I am expecting this market will fall and take this low. So over here, you see this gap over here or that gap. So market went higher, gave me the market structure shift. Now it's a bear scalping, not a long-term trade, just a bear scalping over here. So there, from this gap here. Now I'm going to put my stop loss in the most logical way, the way we should put it, like above here. But for example, I'm in this trade. I wanna go for this trade. I'll put my stop loss over there, and I would. It's just an scalping, okay, not a kind of trade. Just this low. I'll look for this low now. If this low is taken, and then I'll try to hold the trade until this low over here. But for me, this low is more than enough for a small scalping over here, because that is going to give you even the 1:1 partial. This is how you are going to expect if this is not the gap unfilled, because after this gap been validated as a reclaimed inverse gap and order block has been created, market didn't respect this order block. That means that this bearish 15-minute gap is going to give you the reaction. What is the reaction means? This reaction is sending the market lower to take some swing low before going higher again. So it will fall, take this low over here. Why this is not going to work? It has already done its job over here. Send the market to the most logical level, which is over here. It has already done this job. So now I have to watch for the next period. Now still you are seeing this holding the market. This is just a reaction. Don't worry. The reaction actually sending the market either to this gap or to this specific gap over here. Another gap over here. I'm not asking any of you to go for this sell, because I'm not interested to go for the sell. I'm more interested to take the buy, but I'm just showing you the logic over here. Okay, so when this gap, unfilled gap, I wanted to see is filled 100%. Now I'm more interested to see this low to be taken from this bearish 22 bearish model reaction from this 15-minute bearish gap. So until here, I would try to take the buy here, try to take the buy here, try to take the buy here, try to take the buy here. And when I have seen this specific scenario, I'm now interested to take a sell from here to until this low. And if the market really interested to take that low, I highly appreciate if it can do that. But at least until that low, that is more than more than enough for being profitable, in my opinion. Now this what is, I mean, the order block mean threshold maybe, or the 50% could be a good target. This is a scalping, okay? It's not something like you are going to take the buy. Sorry, it's, but we're going to think that this market is going to fall and take the previous low or something like that. No, it's not something like that. This is the thinking process. If you can think like a small trade, scalping. I'm calling it scalping actually, because until this swing low, this is actually a very small range. In a normal market, that is a very small range. So I'll call them like scalping. In a normal market, it's just 15 handles, 17 handles, something like that. So you'll take a risk of maybe 13, 20, 12, 13 handle in a normal market. Okay, here it's 51 handle. But in normal market, you will take like 12 handle, 13 handle risk for 17 handle, 18 handle, 15 handle profit, something like that. So this is a reaction, right? See this reaction. What does it reaction means? Market is going higher to trade the bearish PDRA. After trading the bearish PDRA, it will be broken and market will go for the sell side liquidity. Look at this low and that low, relatively equal lows. Market has built the buy side liquidity over here. So every time people are seeing this as a support, they're going to take the buy, market will fall and take them out. I'm not going to take the sell because I'm interested to see this market to come here. So I'll see when it will take this low, if it can provide me another buying opportunity or not, if it make any sense to you. However, I'm not asking any of you to go for buy or sell. If you are bearish, you can look for the sell. If you are bullish, you can take the buy. So do whatever you want to do. Uh yeah, that's cool. But did I cover not this unfilled gap? I didn't cover this unfilled gap. I've covered that specific gap. Yeah, it already took me, but there was a gap over here. So I just covered that gap just by tick. I know where my stop loss should be above this high, which I'm not able to do, because in a normal market also I wouldn't go for this type of highs. I would just cover the breakaway gap. If I get stopped out, I'll wait for the re-entry opportunity until this lows over here. If it keep going higher in that type of scenario, I'll just simply let this go, because my buying opportunity was here, here, and finally there. So that was the my buying opportunity. Now if it doesn't fall and take this low, it means that all the buy I'm going to let them go now. So it actually took this low. It used this low as a liquidity. I'm not agree with that. That is disaster. Reaction sending the market higher for the 50%. Nice. So it is building more buy side sell side liquidity. I don't agree with this market. If it really would love to go higher and take this high, I'll be very upset on this market. To be honest, I'll be very upset if this high is taken, because I know my stop loss has to be here around that area. This high should be protected now. Like this high, it has to be protected over here. So this market should not take this high over here. However, if this high is taken, that's gonna be so disappointing before clearing at least this low, because this low is not enough for me to think about the liquidity taken. Not enough. Okay. So I highly appreciate this market to fall and take this low. After that, go for this area, around that area. I'm not bearish. Again, I'm not bearish. So no sell is valid to me. I know that eventually this market will come over here. So I'll try a small scalping over here to take the sell. If it doesn't work, if the stop loss is smaller, I'm not going to get hurt. But if the stop loss is bigger, not going to take that type of setup over here, because I know eventually this market will go higher. Remember, don't forget the principle. The principle is this market has to come over here. That is the principle. So I was expecting this low to be taken. Market has used this low as a liquidity. So after clearing this low, maybe market will go over here. I don't need to get a stop loss over here, right? So to take the sell over here. So my principle is it will come over here. So after clearing this low, that low or that low, I don't care. All I care, can the market reach over here? And if you are in this trade from the beginning around that area, you will never get stopped out over here, because you know that your stop loss is at the break even, and this market has, even if it take this low, that low, or that low, you will be safe. And then finally, what the market is reaching for, that specific red line. Remember, what did I say? It's a small scalping. Maybe it will fall, take this low. It is a high probability to take that low, but eventually it will come over here. That is the most logical level where the market has to come. But I'm not able to re-enter over here, not able to frame any sort of buy over here. And however, it has built the water block, sorry, unfilled gap over here from the old setup. Remember the old setup? This is that unfilled gap. So finally, it came back again. This water block, retest this water block over here. So what is that? Around here. Okay. So this unfilled gap I was expecting, it has been created over here. So when I will see the unfilled gap, okay, forget about that. When I will see the unfilled gap, I'm pretty much confident it will come here. More importantly, until there, around that area. This is that unfilled gap, but it actually retested the water block one more time. That was kind of weird. Not happy to see this low as a liquidity, because most of the time this swing low is the most important swing low to be taken as a liquidity. That is called the market structure shift. So it's going to give me another opportunity to take a small scalp for this low, and then the market grinding higher toward that level. I will just give you the recap, guys. The way I talked about this market, I'll explain this one more time. Because right now, when it will reach and touch this line over here, I'll be simply uh, I'll be simply neutral. I don't know what is going to happen next. Simply like that. Okay. So as long as it's not going to touch this line, I will keep looking for the buying opportunity. I want to recap one more time if you guys are interested. If you don't want to listen, then I'll simply close the stream right now, because when this line is traded, I will have nothing to do in this market without wasting my time. The way I explained this market, I have to show you them. Yeah, I know that I'm wrong over here, but I told you that I'm not interested to go for any kind of sell over here. It is a small scalping opportunity, because market has an opportunity to take the liquidity, just a swing low. Now, I really interested to see this low to be taken at least, because that was the shifting market structure. But to be honest, it actually worked with this low as a liquidity, and then finally came here. It will touch over that for sure. But yeah, that is the area was just a bit wrong. That's why I don't prefer to take the sell as long as it doesn't trade the most important level. I'm thinking it will trade. If you are really interested, I would love to go and cover from the beginning one more time, because still now I'm here, no load shedding, nothing. So I highly appreciate if you, I mean, I can go through everything one more time if you are interested. And if you're not, I'll simply close the stream. I think I have given you more information you are needed. Go for it, brother. I'm listening. Okay. I found you, brother Sujivan. At least one guy. One of my brother is interested. Thanks God. I love to talk. It's been a long I don't talk about the market. So I love to talk. But now these days most of the people are not interested to listen. Okay, guys. So start from the beginning, okay? Exactly from the beginning. So this is the all-time high. Market has built the buy side liquidity. This is the lowest down close body close candle. In my opinion, this is going to hold the market, sending the market higher. However, as I am bullish, I'm not going to give any kind of priority to this specific bearish gap. This gap doesn't have any value to me. As long as the body is not going to close above this gap, I'll be confused. Is it going to go higher and take this buy side liquidity, or is it going to fall and take this low over here? This low is an intermediate term low. Why is that intermediate term low? It has a swing low over here, as well as this low has traded some sort of gap over here. This is a beautiful swing low. This is an intermediate term low. Short term low, intermediate term low, and if this low is taken, that is a long term low. That means the market has been shifted. Eventually, it has been shifted from bullish to bearish if this low is taken. However, as long as this low is not taken, I'm going to give the highest priority to the lowest down close body close candle that has taken the liquidity, trade the bullish gap over here. Remember, we have talked about that gaps that it not only me, sorry, not me, actually my mentor ICT himself, he told that from this new week opening gap, 1 2 candle, it will react from there and it will come to these gaps over here. So I was really thinking that market is not going to take this low over here. Instead of that, it will keep going higher because if I mean, so this low is actually taken over here, even though that was an shallow run, obvious liquidity. I was really interested to see it will be safe and then market will keep going higher, but I'm wrong over here. However, so 1 or 2 days I was wrong around that area. Market trade this specific gap, also this bearish gap, and then fall, take this relatively equal lows or the obvious liquidity, trade this bullish gap. Lowest down close body close candle was my order block. Yesterday, market trade this bullish order block over here and then closed around that area, build this bearish gap. So as I'm bullish and I'm clearly seeing that this bullish order block is holding the market, I'm not going to give this any kind of priority to this gap over here. Those people who are bearish actually, okay, so I'm bullish because market left that buy side liquidity over here and the all time high. So all of this area is an extremely strong buy side liquidity or resistance zone. So I'm preferring this market to take that buy side liquidity over here. But those people who are bearish, for example, I was bearish. If you are bearish, this is your most important gap. Why? Because this is the origin high, right? That is the origin high. When this market low went higher, this is the origin high, and it's not a random level. It has already traded an a standard deviation level, and then gave you the market structure shift, fair value gap, trade the highest up close body close candle. That gap, order block has been validated over here. Then build this bearish gap. This bearish gap is referring that order block is protected. So that gap, those people who are bearish, is the most important gap. So if you are bearish, you are going to hold the bearishness as long as this gap is not broken by the candle. If you are bearish, okay. So those people, this is important for me. It's not important yet. As long as the body is not going to close above this gap, I'm just going to think about the buying opportunity. But it's gonna be a low probable day actually, not an high probability. It's going to be a low probability, not a high probability. Going back to hourly chart, this is that hourly chart. I'm going to remove this gap because to me, this gap is not important. If you are bearish, of course, this gap is important to you. Now here from the hourly chart, this is that buy side liquidity around that area. See how beautiful that buy side liquidity, how clean them. Market fall, but before falling, what happened over here? All of these sell side liquidities, relatively equal lows, support zone, all of them has been broken over here around that area. When this low has cleared all the sell side liquidity and trade a gap over here, so simply just go for the volume imbalance. Sorry, here the volume imbalance or anything you would love to add, you can add, but simply it has traded the bullish gap over here for sure. They have been traded. I mean, trade that and didn't leave not even a single sell side liquidity around that area. Look at this market; it will keep going higher. came here and trade that bullish gap, didn't leave any liquidity. Come here one more time, take this high, build the obvious liquidity, started to fall. This is that origin low. This low can't be taken because this low has cleared the liquidity. It doesn't need to take that low one more time. It can do that, but I should expect this low is not going to be taken. As long as this low is not taken, this is more important to you. These areas are more important to you. Okay. So if it is taken, they have no importance. Any kind of gap over here, bullish gap. Okay, I'm talking about the bullish gap. If there is any sort of bullish gap, they are not important at all over here. No bullish gap is important. You can't take any sort of bullish period over here if this low is taken. If this low is not taken and there is a bullish period over here, you can keep reusing them. Reuse them. Okay, one time you use, by anyhow you didn't put your stop loss below this low, so you put it a bit shorter. You got stopped out, closed above this bullish PDRA, you will be able to reuse that gap to take re-entry over there as long as this origin low is not taken. So market came here and then respected the quadrant level of that week. The lower quadrant has been perfectly respected over here. Come here, went higher, gave you the market structure shift from the hourly chart. Look at that bearish gap. Okay. If you find any buying opportunity over there, you guys can go for it. However, I was just going to continue it. Okay. So this low protected market structure shift, fair value gap, fair value gap. Why this gap was important to me? Not that gap. This gap is around the liquidity level. I'm not interested to mark this type of gaps. Of course, this is the last gap that is holding the sell side liquidity over here, right? This sell side liquidity is holding it. So of course, this last gap is important. But remember, 22 YT model setup gaps and the last gap are highly different. Okay, this is highly different. If this market come to this last gap, this gap has the power to stop the market one more time to send it higher again for the all-time high. This gap has that power, but this gap doesn't have that power. It has the power until the liquidity. Okay, so some sort of liquidity need to be taken from this gap. It has already done its job because this is the 22 YT model gap. Market structure shift, entry fair value gap, breakaway gap, entry fair value gap, breakaway gap. So this is the last gap. It has the power to send the market for the all-time high. It doesn't need to send the market for the all-time high over here. It can simply this gap can simply send the market to take some sort of liquidity. Maybe it will build the liquidity, or maybe it will take the liquid. I mean, sorry, it will clear some sort of previous liquidity. I don't know what. If, for example, I have some kind of liquidity over here, okay, so there's some sort of relatively equal highs. Then market come here and take this relatively equal highs. It doesn't even need to take this extreme liquidity and then fall one more time to come to this specific gap. So this gap is actually the breakaway gap for the 22 YT model from the hourly chart. Now, why hourly chart? Because 50-minute chart is extremely messy over here. Just look at this 50-minute chart. It's totally messed up over here. So I'm not interested to use the 15-minute chart. Instead of that, I would love to go for the hourly chart because it's much more cleaner to me. Came back from the entry gap, market respected from the entry gap. Okay, remember this is the entry gap. Sent the market higher for the all-time high over here. Failed to take the all-time high. Instead of that, building the liquidity. Look at this swing high, swing high, swing high. All of them are a beautiful resistance zone. Entry gap send the market higher to build the liquidity. It's a proof this market will go higher again. Before clearing this low, it will go higher again for the buy side liquidity over here. Okay. How do I know that? Because the entry gap over here from the hourly chart build the liquidity. So let me actually mark this high. It will be much more beautiful to me. This entry gap actually build the liquidity. So anytime it is falling, it is going to violate the entry gap because it has already done its job over here. It's going to be respected. That gap is going to be respected for sure. 100% they are going to be respected because it build the liquidity. The liquidity has been built from the 22 YT model entry fair value gap. One more time, I'm going to messed up over here because I'm going to go 1 minute chart, hourly chart, lot of things. You have this is from the 1 minute chart. Okay, so if you ever see this type of things, there is a buy side liquidity. Okay, you are expecting a higher time frame buy side liquidity from 15-minute chart. Just remember, this is the buy side liquidity from 15-minute chart. 15 Guys, please pay attention over here. I know you don't like these things, but if you can understand these things, trust me, man, this trading is gonna be like bread and butter to you. Think like this is a 15-minute buy side liquidity, okay? And this is the 15-minute sell side liquidity. Just remember, this is the 15-minute sell side liquidity, or the hourly, or the daily, but something from your higher time frame. You have 15-minute sell side liquidity over here. You have 15-minute buy side liquidity over here. This is called the extreme liquidity. Now, this market actually come here from 50-minute chart here. Okay, so this is the 50-minute buy side liquidity around that area. And then from 15-minute chart, it has taken this sell side liquidity and trade some sort of bullish fair value gap. I'll just mark the bullish fair value gap here. So some kind of bullish fair value gap, maybe last fair value gap, maybe entry fair value gap, maybe a higher time frame fair value gap. I don't know, some kind of fair value gap. So it didn't leave any liquidity over here. Instead of that, it has traded a 50-minute gap after clearing the 50-minute sell side liquidity. Okay. Now look at this price action from 1-minute chart. You are in a 1-minute chart right now. Okay, so now this is going to be 1-minute chart. Until now, this was the 50-minute chart. Now this is 1-minute chart. So in 1-minute chart, you have seen there is a beautiful 22 YT model around that area. A beautiful market structure shift. There is an entry gap. There is a breakaway gap. And you saw that this market came to the entry gap and come here. Okay, maybe near to this buy side liquid or maybe until there. Okay, just think like that way until here. And then from 1-minute chart, you have seen this market has did some kind of these things and then finally built some kind of buy side liquidity and then come back again. I mean, it is falling. Okay. So let me mark this thing at first from 1-minute chart. Just remember, this is from 1-minute chart. This is 1-minute market structure shift. 50-minute sell side liquidity has been taken. 50-minute bullish fair value gap has been traded. 15-minute buy side liquidity is over here, or the hourly buy side liquidity is over here. From 1-minute chart, you have the market structure shift over here. You have the entry gap around that area. So I'll just mark it EFVZ. So that is the entry fair value gap. And you have the breakaway gap over here. Around that area, you have a breakaway gap. Now, this area over here, so I'll just keep it a bit higher. Maybe there is a gap. Maybe there is a gap, okay? It is called the last fair value gap. This gap and this gap has a huge difference. This gap has been created from the 22 YT model. This gap has been created while this market has fallen over here around that area. Then started to go higher without the market structure shift. It has left that gap open over here. So this gap and this breakaway gap is highly different. It has a huge difference over here. So where I was, it came to the entry fair value gap and where it is reaching for that buy side liquidity. You know that this buy side liquidity is going to be taken. But suddenly you saw this market didn't clear the buy side liquidity. Instead of that, it has built the buy side liquidity over here from 1-minute chart. So this buy side liquidity is from 1-minute chart. 1 minute. You have heard the uh how to say that, like uh internal liquidity, external liquidity, right? So let me actually explain why, how it is actually going to be very important to you. This 1-minute liquidity is actually the internal liquidity. Now, maybe from the 15-minute chart, there is a bearish gap. Okay, maybe this is a 15-minute bearish gap. Entry fair value gap, last fair value gap. I don't know what is why it went from there. Okay, just a second. I think let me actually go to the visibility and make it hourly. Okay, perfect. So 1-minute chart, and I was around, sorry, where I was around hourly chart. Okay, so here. So think like that way. This is that 50-minute gap or the hourly gap, and you are seeing there is a small market structure shift, fair value gap, a selling opportunity over here. Now, this sell, of course, you can go for it. I highly appreciate not to go for this sell. Actually, what it is doing, it is coming back over here around that area. So let me actually remove it. It is coming back to this specific breakaway gap over here because previously market didn't trade this breakaway gap. In the meantime, maybe there was an order block and it has traded that order block. But this time, this market is going to violate the order block over here. This order block, all the bullish PTRA are going to be violated and market will come to this breakaway gap. Very rarely it come to the last gap. Very rarely, most of the time it comes just the breakaway gap. After coming to this breakaway gap, because this is a big fall, in this fall from 1 minute chart, you will see a lot of bearish gap over there. Ignore all of the bearish fair value gap. It will keep grinding toward that buy side liquidity from the 1 minute chart. Okay. And I highly appreciate to take the 15-minute extreme liquidity. Most of the time it actually take that buy side liquidity. But even if it failed to take this buy side liquidity, that is going to be taken for sure over here. This is going to be taken. I hope it is understandable to you. If it is not, if you have some confusion, please let me know that. Until now, if you have any kind of confusion over here, because I have to come back to show you exactly the same thing over there. On the daily time frame, can we look at the fair value gap on an expert and also the highest close gain candle as a order block? Yes, sir. I have already talked about that. Those people who are bearish, that gap is extremely important for them. But I'm not bearish, so it doesn't have any value to me, to be honest. When water block unfilled gap after that, okay, yeah, that is the something you will actually add over here. For example, after the water block has been traded or everything, okay, so something like that, there was the water block that has been traded and you are expecting this is going to be an unfilled gap, and then you saw that market has leave this gap leave it unfilled over here, and then fall and close this gap. As long as this low is not taken over here, right, this is that origin low of this 22 IT model. As long as this low is not taken, you are allowed to take the breaker block entry, that is the high probable breaker block. Now this breaker block doesn't need to create above this entry gap or above the water block or anywhere, simply anywhere that breaker block has been created, you are allowed to go for the trade as long as this 1 minute liquidity is not taken. If this origin low, sorry, that low is taken, the breaker block is not valid anymore, because this low is taken means whatever low here, maybe there is some more sell side liquidity from the 15-minute chart. Okay, so it was the internal sell side liquidity, that was the external sell side liquidity. If this low is taken, that means that market has a high probability to go for this sell side liquidity at first. Later it will come for this buy side liquidity around that area, or around those buy side liquidity will be triggered later if this origin low is taken over here. Does it make any sense to you? I hope it will make some sense to you, because even though you are not replying, but yeah, whatever it is. So I would love to show you what happened exactly over here. So I'd love to go for that hourly chart, and I'm going to remove all of them. I just came from here to here, right? So what happened here? Exactly the same thing. From the hourly chart, it has cleared all the liquidity around that area, right? All the liquidity. This is that low that has traded that 15-minute, I mean, sorry, the last fair value gap, right? That low has traded over there. Simply, as I told you, this low is taken means market is going for the next sell side liquidity or the buy side imbalance, sell side inefficiency. It will go for that. This is that same kind of low over here, and then it has provided me the market structure shift entry gap. When market tapped to this entry gap, it went higher. It has engineered the buy side liquidity. It can be engineered by the new highs, or it can be engineered by the old high as well. Okay, so it can add the old high as well to building the buy side liquidity. So this high doesn't need to be created over there. Just this high is more than enough for building the 1 minute liquidity. And think this is the all time high or the extreme liquidity from the your higher time frame. Okay, so that is the extreme liquidity. When it build here and then it has given you a selling opportunity around that area, don't go for this sell. Don't fall into this trap. Yeah, you know that maybe it will coming for this 22 Y2 model breakaway gap over here, maybe, but it's a low probability that market will come over here, and then it can simply respect the order block and be retested. The market can simply fill the unfilled gap and build the breaker block and keep going higher, or maybe it will just trade some sort of bullish gap over there and keep going higher to take this buy side liquidity. It has a lot of opportunities to go higher to take that buy side liquidity anytime in this market, anywhere. Okay, so the sale is highly risky as long as this buy side liquidity is not taken. The maximum fall until this last gap, I don't appreciate for this market to come over here, but of course it can come around this last gap as well. I highly appreciate if it can come to this breakaway gap from the hourly chart. This was the breakaway gap, right? So that is the breakaway gap. So it has an high probability to come to this breakaway gap and start to dig the market until the buy side liquidity over here around that area. So that's why I was saying that when this market came here to this hourly gap around the opening, before the opening, And then I was more interested to see this market to trade this order block, lowest down close, body close candles from this old 22 buy model. So here there was an order block that has been violated already over here, right? That they have been violated over here. And maybe there was an fair value gap or everything. Okay. So you even if you look for the breaker block, low, high, lower low. Okay. So this low is the breaker block low. Mohawk can happen. That means market can just go below this low and then it will keep going higher, or maybe it is interested to make another breaker block. I don't know what is going to happen over here, but anything over here is highly important to you. The bullish pdra, anytime it will start to react from any sort of breaker block, order block, anything over here, it is a high probable buying opportunity from there. So when I'm seeing this market came to this hourly bearish pdra, I'm more interested to look for the sell at first so that it can trade any sort of bullish pdra. So immediately I came here in my 1 minute chart around that area, and I told you around the morning session this market will first fall until the bullish PDRA. So there was a lot of bullish PDRA, fair value gap, order block from 15 minutes at fair value gap, order block, quadrant level, dealing range quadrant level, or the maximum fall is until the last fair value gap, which is actually the breakaway gap from the hourly chart. So when this market starts to trade, I talked about this sell at first, right? That this market has to fall at first. How long? I don't know. Where it is going to stop, I have no idea. But I know that it is going to fall at first. So what I will do, maybe I'm in this trade over here, market take the buy side liquidity, market structure shift, fair value gap, trade that fair value gap. I'm in this trade. I'll take the partial. I'll put my stop loss to the break even and I'll hold my trade as long as it is falling. I'll just try to hold them by trailing my stop loss or by taking the partial, and simply I'll close the trade wherever I feel good. I'll just simply close the trade. Now, this fall is your first sell around that area. Now, for the first time, when it came to the most logical level, you will keep waiting for your buying opportunity. Keep looking for the buying opportunity. Where is my buying opportunity? Why is my buying opportunity? Now it falling. I'm looking for the buying opportunity. Maybe I'm in a sale already. Maybe I'm holding the trade. I don't give a shit about them, or maybe I'm not in a trade. I'm just waiting for the buying opportunity. So I'm waiting all the bullish PDRA it is trading, and I'm waiting for the buying opportunity, buying opportunity, buying opportunity, buying opportunity. And finally, I found the 22 YT model over here. So what should I think? How far this market is going to go higher? Now here, this is that buy side liquidity, old buy side liquidity, this high, sorry, not that high and that high. They're the buy side liquidity. Okay, so I'm just going to mark this as my buy side liquidity around that area, around here. This is my buy side liquidity around there from 1 minute chart, and it has fallen over here. All I need to see, where is the dealing range equilibrium, and that means this fall. Where is the equilibrium? Now, how I'm going to find out that? It is highly important to understand the dealing range high and the low. Now, am I going to mark from here or am I going to mark from there as my dealing range? Okay, so if I mark from here, observe it very carefully, guys. Right? This is the dealing range. Like, look at the fall. Where is the where this market started to fall? From here, right? So dealing range should be from here to here, and it has already traded the 50%. Now it is going to fall, right? You will think like that way. Now it is going to fall, maybe it will keep continue to fall because it has traded the 50% of the equilibrium, most logical level. It has perfectly done that. No, man, it's wrong. I would look for this high as my dealing range if it could take some sort of swing high. Now you can say that, brother, this swing high has been taken over here. Now, first of all, this is the 930 candle, so it can be a little volatile. I'm not interested just for this type of liquidity taken. If this high is taken, for example, this high is taken, or maybe this swing high is taken, not the extreme swing high, maybe this high, or maybe that high is taken. This could be my dealing range high. As you can see, this is the last time market has cleared some swing high, like any kind of swing high has been cleared over here. Yeah, this is a bit retracement. I don't give a shit because this retracement didn't clear not even a single liquidity. It's not the dealing range high. If it would taken some swing high, some kind of swing high like this one or that one, this could be my dealing range high, not this one. This could be my dealing range high. So as it didn't do that, this is my dealing range high. Even though there was a small consolidation over here, I don't give a shit. All I need to do, mark this high and that low, and I'm thinking that this market will fall or maybe it will keep going higher. After that big fall, you need a retracement from the most logical level. What is the most logical level? This gap, right? This is the last gap. Of course it can fall for the last fair value gap, but as I explained previously to you, the hourly breakaway gap, right? This is that breakaway gap. So it is the most logical level, and I'm seeing the reaction over here, right? Market is reacting from there. How far this market should go until the 50%. That is the best area for this market to reach. Now, it doesn't need to do that. 99.99% of the time, market come to this 50%, dealing as 50% of the dealing as 50%. 99.99% of the time, market actually come over there. Now, it didn't come over here. I'm still believing this will go higher. But it is going to respect from this water block. Observe this water block. I highly appreciate if it respect this water block. I'll explain why this is the water block as well. But first, let me actually explain the things over here. So this market came, where should it come? Until here. So it came here. First of all, I'm waiting for the buy because from my higher, very, very higher time frame, I'm bullish. How long? Until this buy side liquid, I'm extremely bullish from my very higher time frame, hourly, daily chart. Okay, so I'm bullish. And now suddenly I saw this fall over here. So I'm afraid to think about that it's going to go for this extreme buy side liquidity. But there is some level that needs to be taken, needs to be traded. What is that level? This line over here. I know that even if it is a bearish market, it is coming for this line, at least to this line. Do you understand, or are you getting the point, guys? I'll just keep asking you the things over here so that you can get every single possible scenario, so that you can understand what is happening. Now, first of all, when this market came here around that area, this is the high probable entry opportunity from the order block, from the old gap. If you see, that gap has been traded already, and there is a lowest down close body close candle that has worked as an order block. Remember, it has to be valid order block over here. If it is not a valid order block, there is no entry over here to you. If the gap has been traded one more time, right here, this is the second time this market is trading this bullish gap over here. Second time. First time, this market has already traded this gap. So second time, this market is trading this gap over here. Before clearing this buy side liquidity, this is the second time market is trading over here. So this is the first time. Remember, there has to be a valid order block. If there is not a valid order block, or market didn't trade that order block, it's not valid to use the order block over here. Okay, these lowest down close body close candles are the order block. You're not allowed to take the entry over here for the first time because the high is below the high of this hourly gap. So you are not allowed to take the entry from the first time. Uh, you can use this one actually because this high is actually above this high, but that is a different case of scenario. Here was actually 22 IT model, exactly the same 22 IT model I used over here around here. Remember the 22 IT model? Exactly the same thing appeared or happened over here as well. Let me show you that. Market structure shift around that area. Market structure shift, fair value gap, lowest down close body close candle, 1 minute order block, not two time frame order block, 1 minute order block. You are not allowed to use this order block later. Remember, this order block you are not allowed to use it later. It is not a valid order block to use or reuse. You, of course, you can do that, but it is not valid. Trade that order block. Look at this unfilled gap over here. I'm gonna extend it to my right around here, and I'm gonna mark it as an unfilled gap. I'm going to show you more things over there. Okay, extend it to your right. So I'll keep it over here. Later I'll watch how it has been worked. Order block, origin low is over here. This low can't be taken. If this low is taken, there is no other opportunity for you to use any sort of bullish period around that area. No bullish period. Okay, so remember this white line over here. That was a beautiful buying opportunity. Yesterday I was extremely bullish, so I was framing a trade around that area. Unfortunately, it didn't work, and then later it actually fall one more time, take this low, and then went higher. I just didn't touch it because that was a messy buy run, up run. So I really am not interested to take this high. So remember, not only this high, but also that relatively equal highs here to here. That relatively equal highs has been cleared. But the way it went high, I didn't really like it. So I wanted to see this 22 YT model to work. It didn't work. It stopped me out. I could simply frame another trade for that buy side liquid. I just didn't do that. I simply let this go. And I was also not watching that trade over here. Then market fall. Where did it came? To this gap. What is the next target? To that gap. Remember the gap from the hourly chart? This is that bearish gap from the hourly chart. Let me show you this. This is that hourly bearish gap. Okay, so market came exactly to this hourly bearish gap. This is that same area over here. Actually, let me keep the hourly gap in 1 minute chart so that you can understand what I mean to say. Okay, so here, mm, why it's not coming? Sorry. Uh, 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 just a second. Yeah, now it will come. This is that hourly gap. So what did it happen? Came and look at the time. Look at the time around the last hour. So it happened around the last hour. However, you knew that if it come here, the next target is here. That was obvious. That market is coming over here around that area. This hourly gap. So look at the fall. Market structure shift, fair value gap. You are already in a trade over here from this 22 IT model. You have waited for so long. Oh man, the stop loss was just 30 handle. That was awesome. That was really awesome. 30 handle risk or 9 handle. Even if you trail the stop loss, you will never get stopped out. I promise you, brother. If you keep trailing your stop loss, you will never get stopped out over here because this market never did any kind of manipulation before reaching to this gap over here. Even though it takes too long, like, but it is what it is. However, it was just a risk of 30 handle. That was an awesome trade around the PM session. So this area, I'm just going to use this candle. Remember, this is the order block you are going to reuse. The lowest down close, body close candles. You are going to reuse that candle as an order block. So I'm going to leave this candle open and mark it bold. Okay. So this candle, I'm allowed to use this candle as a reclaimed order block. Remember, it has to be traded. If it doesn't trade here, you are not allowed to use any sort of candle to use here to make it as your order block. Okay. So first of all, look at this candle that has tapped to this order block. Now here, this is that lowest down close body close candle. This candle, unfortunately, that candle closed above this candle. So you never got an opportunity to take an entry from this order block, right? This candle has validated. This candle never tapped to this area. More importantly, look at this gap. Remember, what is that gap? Wanna say unfilled from that old 22 YT model. What I keep saying, this is a model or this is a gap I've never seen it has been broken or it didn't work. I've never seen in my life. It didn't work. Okay. How many times I did show you the breaker block in my life? Old PDRA, old everything, your expectation this market is going higher. That was that unfilled gap from the 22 YT model yesterday. Market structure shift from the most logical level, fair value gap, lowest down close body close candle, trade that lowest down close body close candle, gap should be unfilled. For the first time, the gap has been filled 100%. What should you look for? Now, by the way, I didn't see them actually. To be honest, I didn't see them. Even I didn't see that setup yesterday. I was not watching the market. Low, high, lower low. Close above the candle, tap to this candle, you are already in a trade from the breaker block. I don't give a shit. I have never seen in my life this breaker block has been failed in my life. Okay. Oh, okay. Actually, it didn't give you the entry just for a bit. You actually missed the trade. Let me actually recheck from the NQ. Does it really missed that or not? Let me recheck. Yeah, it actually missed your entry just by a tick, I guess. This candle high is 6400. This candle low is 6400. 6400. Okay, it actually tapped to this candle tick by tick. So if you are trading through the Nasdaq, it actually perfectly worked over here. So that was the breaker block over here. Low, high, lower low, highest up close body close candle. This candle has validated this breaker block. Tap to this breaker block tick by tick. I mean, you can watch it over here if you have any confusion, and then just keep grinding. Okay. So it actually later come back again to this breaker block one more time to retest this breaker block. So let me actually see what happened here. Did it give you the entry? Yeah, it actually tapped to this gap later. Came exactly to this breaker block one more time, going to go higher where the most logical level you are thinking this market will go. So here, where I was over here, so that was that order block. You are allowed to take the entry exactly from here. First, I showed you how you are going to look for the trade and which way you are going to look for the trade. Even if this extremely bearish market, you know that you are going to get an reaction until the 50%. Okay. So you are going to get a reaction over here, the retracement over here. So what you are looking for? A buying opportunity. First opportunity from the order block. By any chance, you missed this order block entry. Second opportunity, the order block, sorry, the breaker block. Maybe you have missed this opportunity. Third opportunity, third entry model, which actually most of the time you are going to get these two order block and sorry the 22 YT model and the order block. These two entry actually most of the time you are going to get, not the breaker block. Luckily I had the breaker block over here, but most of the time you are going to see either the market structure 22 YT model or the order block entry. Any of them you are going to get. Okay. So the only gap over here is this one from the 22 YT model. So you should go for the trade simply by believing the setup from that gap, stop loss below this low according to the logic. Forget about the stop loss, I mean the handles, because they are pretty much huge volatile. In a normal market, you will be able to put your stop loss to the below that one, or at least below the word block mean threshold or something like that. Okay, so how long you're going to hold the trade? Until this area over here, which is the 50% of that new dealing range. Okay, dealing range high, dealing range low. As long as it's not touching it, you keep looking for the buy. Remember, it's not a fall. You can't think that it is going to fall now. Why? Because it's an unfinished business. Market didn't touch it. You just have to reconfirm from the NQ market, because sometimes what happened in MNQ market doesn't tap here, but in NQ market it actually done the job. So if NQ market is done the job, your job is done. It doesn't need to go back again to the 50%. Actually, let me say, okay, it's not unfinished business. It's an unfinished business here. So still it will come over here. I believe that it will come over there. The delinquency 50% is most obvious. It can go for the 618 level as well. I don't give a shit because I'm going to hold the trade until this area. Okay. So over here, maybe you'll get an opportunity to take the trade from the 22 IT model. You're going to go hold it until here. Or maybe you have got an opportunity to take the entry from the order block, which is much more beautiful because you're going to get the entry exactly at the beginning and then you're going to hold it until over here. This is something you have already found. Okay. So by anyhow, you missed the trade around that area from the gap. So what is your second opportunity to take the entry? Order block. This 22 IT model, fair value gap. By any chance, maybe you were just went to pee or drinking some water and you have missed the trade. Okay. Guys, are you getting bored? Or is it making any sense to you? Or I'm just talking to myself. I'm going to close the stream just a bit within a moment. But are you getting my point or are you just getting bored a bit? Let me know that. Keep watching, okay? This is coming for this line. More probably it will come over here. I'm not sure about that, but watch it. It's an unfinished business. It's not a fall. Why it is falling? Remember this? I told you that it should fall from here. It should fall from there to take this low. Remember, I framed that sale as well. I'll just cover that within a moment. I told you that this is not convincing for me. It should not just simply take this one and then come over here. So look what happened. It came here and not only take this low, but also took that low as well. Like this is the low that should be taken. Okay. But unfortunately, this time market was a bit messy. So it actually went higher. However, let me see if he's an no managed. Thank you, brother. It's very helpful. Yeah, okay. So I can see that some of you are over here. Thank you so much for being over here and you are still listening. So let me actually finish the things. Otherwise, load shedding is gonna be disaster. So here, if you miss the trade from this fair value gap, what is your next opportunity to take the entry from the order block? 22 YT model order block. Okay. Market structure shift, fair value gap, which is over here, not the breaker block. This is the here tap to this lowest down close body close candle. I don't prefer to take the entry from this type of candles because they're indecisive. They're not really good order blocks. So even if it tap to this order block, I prefer not to take the entry. But however, always look for the immediate reaction. After building the order block, you will start to count the candle. 1, 2, 3, 4, 5. Within 5 candle, did you take the entry? No. It's not a valid order block to take entry anymore from here. So what you will look for? Another candle, another time market will come here and trade this order block as a lowest down close body close candle. That's gonna be your real order block to take entry over here. Okay. So around that area. Now, some of you will call it propulsion block, some of you will call it water block. It's up to you, brother. I would love to call it as a water block because, to be honest, this water block didn't finish its job. It's going to finish it over here, and when it is going to work as a later use, it is highly valid as long as it doesn't reach to the most logical level, right? This is the most logical level. It didn't do that. Instead of that, it built the liquidity over here. Just the reaction from this gap. This gap is just giving you the reaction one, two time so that you can get an opportunity to take the entry from the order block. More importantly, this gap I have already explained you inside the video, sorry, inside the stream. While I was doing the stream, I told you just observe this gap, how strong this gap is. Now, for example, you missed this order block here, entry here, and you saw here. Are you going to chase the market because you are 100% sure market is coming over here? Are you going to chase the market? No. Wait. When this high is taken, remember it is highly important. If this high, any kind of swing high, okay, any kind of swing high that is above this gap before reaching to the most logical gap where you are expecting from your higher time frame, it is going to reverse from this gap. You are expecting this that highest, I mean, sorry, last pda, this should be the last pda. So whenever you are thinking this is the last pda and this market should reverse from there below, sorry, above this last gap, or vice versa. If you're looking for bearishness, then of course above the, below the last bearish gap, as I'm showing you the bullish case of scenario. So above the last pda, this gap, above this gap, whatever high you have, the swing high, if this high is taken, you will expect this market will come to the 50%, 618 level, any of this level. If this high is not taken, there is a high probability it will work with the upper quadrant and simply go higher. In that type of scenario, you will have nothing to do. Simply let them go. Okay, don't chase the market. Simply let them go because sometimes it come here and you will just, I mean, messed up over there. So please don't get confused over here. If you see this high is taken just by a shallow run, not the liquidity taken, body close, so you see this high has been already taken. Okay. If you see the high is taken, this word block entry is not valid anymore. If you see it is an unfinished business, so you are believing this is going to be the obvious liquidity, market can go back one more time for this buy side liquidity, and it has taken this high. You will expect this market is retracing either the 50%, maximum the 618 level. If you have the breakaway gap, remember entry gap, build the liquidity, breakaway gap now is in the play. Unfortunately, I don't have the breakaway gap over here. See the logic over here? Market structure shift, fair value gap, order block, maybe trade the order block, maybe didn't trade the order block, went higher, build the buy side liquidity. For the sake of this conversation, you have the breakaway gap over here. There is a high probability this market will come to this breakaway gap at first, then go for this buy side liquidity. As I don't have this breakaway gap, I prefer 50%, 6 on 8 level. Any of this level will be traded. Market will go for that buy side liquidity. Why did it came? 50%. Look at the reaction from there. Order block, retest the order block, tap to this order block, buy side has been cleared. So you are already in a trade from this order block by covering the low, or like the order block low, and your target is going to be this buy side liquidity, and you will try to hold the trade until this line. If you got it, perfect. If you don't get it, just let it go. Okay. So until now, I hope you will got an opportunity. In the meantime, I talked about this fair value gap over here to take the sell, to take this low over here because that was a high probability, but unfortunately market actually went higher, didn't do that, and then didn't do that and simply failed to reach the level I was expecting. Fall, what did it has done? Let me show you that as well. Unfilled gap has been filled. What you should look for right now? Low, high, lower low, tap, tap, boom. Now, if you ask me in this price, to be honest, except this candle, I don't see any breaker block. Except this candle, I don't see any breaker block. So if the market close here, then it will actually come here. It is not a valid trade, by the way, because the range is very small, because this is the only breaker block so far. But maybe it will make another breaker block. So maybe I'm not saying it is going to happen, but maybe Uh, maybe low, high, lower low, and then the highest up close body close candle here, and then tap to this, and then boom here. So in that type of scenario, I'll look for this candle as a breaker block, and I'll use this one. If it fall and take this low, then this this is going to be your breaker block. If it doesn't do these things over here, uh, then of course you will have no opportunity to take the entry in this type of scenario. You have to just observe this candle and you have to let this go, because from here to here it's 48 handle. But if you would love to take the entry, you have to cover this inverse gap below the breaker block. You have to cover the inverse gap, so it's a 124 handle risk just for 48 handle profit. I don't think so it's a good idea to go for it. Okay, so watch it, and I'm not saying it is going to happen. I'm not saying that I'm right. It will come here or here. I'm just trying to show you the logic over here on this market, the way I see the market. This is my thinking process. So I prefer this market to work like that way. Maybe I'm wrong. Maybe this market is just simply falling and keep going higher for the sell side liquidity over here. Wherever the sell side liquidity is, it will go over there. Maybe I'll be wrong. But this is how I keep seeing the market. Okay. So when I saw this, that was an scalping opportunity for me. But I know that eventually this market will go higher. So if I see the stop loss is smaller rather than my profit, then I prefer to go for that trade. If I see my stop loss is be, like 1:1 even. So for example, stop loss is over here, stop loss is over here, and my target is at least this low over here, and it's six, like for example it's 6 handle stop loss and 12 handle profit. Of course 1:2 I'll go for that because the loss is smaller, the profit is bigger. If I see it's 1:1 for example, so 1:1 or maybe less than 1:1, I don't simply let, just simply let them go, because scalping, I know that eventually this will go higher, and if I'm wrong I'm going to get a bigger loss. So I don't want to take that sell over here. But the explanation I have given you over here, according to the fall, look, it failed to touch this line, and a lot of you will start to think that, oh man, it's not going to touch it. You're wrong. No, I'm not wrong, because it actually messed up over here with me, and it worked here with that logic. It should fall and take the liquidity. It was not convincing for me, to be honest. Like, this is the market structure shift. It's not the liquidity taken. The liquidity is at least below this low, maximum below that low. Okay, this low can't be taken because that is the origin low. It can't take this low, but at least this low or that low, any of this low need to be taken at first, and then market should come and touch this line over here around that area. Or maybe it will come here, I don't give a shit, but at least until this line over here. Thank you so much, guys. I talked too much today. I hope it will make some sense to you guys. If you can observe them, or if you can, I mean, this is my thinking process. Okay, simply, I'm not saying I'm right, I'm not saying I'm wrong, I'm not saying I'm teaching you something, I'm not saying I'm the guru or something like that, mentor or something like that. I'm just sharing my thinking process over it, the way I see the market. So if I see the market and if I'm interested to go for a trade, for example, first trade is a losing trade, I don't give a shit. I know that the next trade, most of the time, it's going to be a winning trade. Sometimes I will take one or two loss, like continuously I'll take one or two loss. For example, here, if I get this sell here and this buy over here, this buy over here, and then also this buy over here, how many times I'm going to be profitable over here? And then finally, maybe I'll take a loss over here around that area. That sell, I'll take a loss over here, and then I'll let this market to fall to take the liquidity. Then I'll start to look for the buying opportunity from this water block. By the way, it didn't tap this water block. Why that was the water block? Because this gap is the real gap, and this candle was the water block. So it was meant to go to the breakaway gap. As I don't have the breakaway gap, so it has reused the only gap. If I had the breakaway gap, I could use this candle as an order block to take rebuy over here. As I don't have that, this old gap, just one gap, 22 YT model, or one only gap, is worked as a new order block around that area. So this was an high probable buying opportunity, but here I prefer the breaker block rather than anything else. The breaker block is only thing that I prefer to go for, because that is the high probable buying opportunity from the breaker block. If you can understand this thing, I hope it will make some sense to you next time when you will watch the market, and you are not going to fall into this trap to take the sell, or into this trap to take the sell. Instead of that, you will let the sell go, you will wait for the buying opportunity. You will let the sell go, you will wait the buying opportunity, as long as it's not going to reach your logical level, wherever it is the logical level. So look at this candle. If it closes above one tick above this line, I promise you, brother, this line will be touched just by using this. Okay, it can miss this line to retest, so something like this, like here, here, here. Just watch it. But before tapping here, if it touch this line, this is not valid. Remember, this is the breaker block. I have never seen in my life this breaker block has been failed in my life. Now, I'm not able to take this trade because I have already told you that the stop loss is gonna be like disaster, like here. Okay, so long is going to be there. Stop loss, I have to cover this breakaway gap. It doesn't need to come over here, but it can maximum fall until this inverse gap. It doesn't need to do that, okay? But it can come over here. So I have to make sure the low of this candle is actually covered by my stop loss. Sorry, sorry, here, okay? So the low of this candle is covered. Target is this, and then finally that. There is 99% possibility market will touch this line from this breaker block, because that is the most logical line this market has to go. I have to rewatch to make it 100% clear. Thank you. You're most welcome, brother. Skull PT. Sorry to hear, brother. What happened, Skull PT? And I blow my 20 accounts on Apex. Oh man, that's a real bad news. That's the real bad news. Just don't worry, man. Tomorrow is a better day. So I don't know what to say, man. We're very near to get the payout. If you got that payout, it could recover all of your expenses behind this trading. But next time, inshallah, brother. 25 or 52, could you please at the end of today explain about Apex end of day and trail? Which one? I always prefer end of the day. End of the day is highly appreciated if any of you are interested. However, just let me actually put the stop loss over here and here. I mean, I was really watching this trade from there. I wanna see this work like this way, which is actually logical to me. End of the day and the trailing drawdown. What do you mean by that? You take a buy over here, okay? And 1:1. So let's go for 1:1 here. So that's gonna be your first partial, and you want to hold the trade until this line, okay? Something like that. So you took a buy over here, and it came here. You are already entered into a trade. Came here, you took 50% partial. So you took maybe 4 contract entry, okay? 4 contract entry. You closed 2 contract. And now your stop loss is at the break even. I'm talking about the end of the I'm sorry, trailing drawdown, not end of the day. So you put your stop loss to the break even. You closed 2 contract, and then you got stopped out here. What is going to be end of the day? Your profit, 0. Because of this unrealized profit. Okay, realized profit, unrealized profit. I don't know how to say that, but this is kind of unrealized profit or realized profit. I don't know what to say them. But this is actually trailing drawdown. It's not going to be counted at the end of the day. It's going to be counted in the meantime while you are trading. So this is highly avoided. Okay, so if you have any opportunity to avoid trailing drawdown or intraday drawdown, avoid it. Because what you do, how you have to deal with them, you have to simply close the trade over here. 1:1, you have to simply close the trade over here. No way to hold the trade. There is no way to hold the trade. Okay. So maybe it will fall for this inverse gap, then it will come over here. We'll see that later. I was really thinking that can I hold that trade by putting my stop loss to the break even? Sorry, to the below the mean threshold. But I can see that it is not interested to do that. So it will maybe work over there. This is the only way to pass the trailing drawdown accounts. And to be honest, sometimes you'll see that you'll close the trade and this market actually came here. And that was a beautiful run. That was an awesome run. Okay, so you missed the whole run because you closed the trade over here. For example, you took the entry over here around that area. Okay, so this is your entry and you closed your partial over here and this is your target. Okay, so what did you see? This market came until here. Your stop loss is now at the break even. Remember, this is the partial you have taken. It came very near here and didn't hit your target. Instead of that, fall and stop you out, and you will see your account is in loss. Like it's showing that you are minus. Your equity will be in profit, but your realized unrealized profit will be like in loss. So this is highly avoided. If you can avoid it, go for it. I mean, just avoid it. And trail, I mean, end of the day drawdown is means you took a buy here, took a partial, put your stop loss to the break even. Whatever partial you have taken, that has already been in your account. Okay, so you don't need to worry about the uh, unrealized profit or something. You don't need to worry about them. So I highly appreciate if you can go for the end of the day, just go for that end of the day. So you suggest end of the day. Yeah, I suggest the end of the day, brother. By the way, guys, I'm going to close the stream right now, but observe this breaker block. Remember the maximum fall until this inverse gap. That is the maximum fall. I believe that. And market has a high probability to come over here. Even though I don't have the liquidity. If I had the liquidity, I could simply try to take an entry over here actually. Actually, I would go for this trade because this is a logical level. I don't want to target the logical level instead of the liquidity. If I had the liquidity like this way, I had the liquidity over here around this area. That was the buy side liquidity. I could take the risk around the water block, fair value gap, everything. I can take the risk. But if I don't have the liquidity, I really don't appreciate to take any kind of trade without the liquidity. Okay, no worries, man. We'll see you tomorrow. It was a highly volatile day. I didn't take not even a single trade today. I just keep framing them, but didn't push not even a single trade. And so far, I frame the trades. You can all see that how it actually worked. Good night, brother. Thank you. Good. Thank you, brother. Got it. No worries, man. Thank you so much, guys. So see you next time. Maybe tomorrow, God willing. Until then, cheers, guys. By the way, please don't forget to push the like button before leaving the stream.